Bet we're recording it. So this probably is going to be my last video of 2023. And I just want to say I appreciate every single one of you guys, no matter where you are in your trading journey, whether you're just beginning, whether you got, a couple of years trading. I just wish you the best going into 2024. And I'm here for you guys no matter what. You can ask me questions. You guys have direct contact with me. I would never shy away from any of you guys. I really do. I appreciate you guys supporting me, supporting the community, supporting the chat, sharing ideas, and just pushing the space forward. In my opinion, 2023 was a big revelation in learning daily draw. Like it finally clicked for me. It took a while for me, and it was really obvious in front of my face. And I knew I had the tools. And I feel like this year, with figuring out daily draw and like really dialing it in and figuring out a intraday model that I could use on a day-to-day basis, which was the Asian session model. I feel like those were my edges for 2023, and going into 2024, I'm just going to keep pushing and pushing the boundaries with that. So appreciate all you guys coming here. Support to all you guys, you and your loved ones, wherever you are in the world. Hope you guys are safe. I wish nothing but the best to you guys. Bless you guys. You guys deserve everything. I know it's hard being a trader. I know that we all come from different parts of the world and different strides, but I do really believe that we all can prosper together as a community. If I win, you win. That's just how I see it. If I'm learning something, you guys are gonna learn it as well. If I find it valuable, I'm gonna share it with you guys. And that's just how I see it. Why bring down each other in the community when we can all just win? I know we all are striving for the same goal, whether it's to be financially free, to get away from a 9 to 5, to support our family and our loved ones, to support a goal or career driven dream based off of, just being a trader, full time, part time, whatever it is. We all have most likely the same goal, which is to make money. So let's just jump right into it. I have a small presentation and it won't take long. If you are joining me now or you're just joining the Zoom, like I said before, I appreciate you guys for all the support and just trying to keep the community safe from lies, scams, and any other nonsense that just doesn't make any sense. How's it going, man? All right. I just want to make sure I'm sharing my screen. Cool. I think I am sharing my screen. New share. I'll just share the entire screen. Doesn't really matter. You guys can see exactly what I'm doing. All right. So this is the presentation I had for you folks, or I was going to pre-record it. So it's a 2023 review, and you're going to be exploring the market from my perspective as Deontay, aka Forensic Forex. So just a thesis statement to begin. Like I said, this is a long one. I know it's New Year's Eve. I apologize. I didn't expect to do this, but why not bring value? And I'm just here in the house just waiting to go to bed, and I'm just like, I just can't sleep. So just wanted to get it out. So my thesis statement is essentially this. In an arena of day trading, retail traders face formidable obstacles in recognizing and interpreting market trends and their progression. I state the critical importance of acquiring a thorough comprehension of market dynamics, highlighting the deliberate and purposeful movements inherent in the market operations. The challenge lies in deciphering these intentional shifts, amplifying the enduring difficulties incurred by retail traders. Consequently, they find themselves drawn into less than optimal trade choices, enticed by the market's altering phase of rapidity, excitement, and episodes of sluggishness and stagnation. So today's agenda, we're going to process bullish months, we're going to process bearish months, we're going to look at the opening price ideology, and we're going to look at institutional momentum. So we're going to be looking at both sides, bulls and the bears, and there might be a few examples of stagnation and sluggishness. as we go along because we're going to be looking at basically January all the way to December. I'm not sure how far I'm going to get into with one pair, but I will show a lot of examples just so we can all be on the same page here. When I show you this, I believe that you will have a clearer understanding of what I mean by the process of a bullish trend and the process of a bearish trend. So we're going to be talking about some of the pairs that I track this year in the daily tracking. So we're going to be looking at UJ, USWISSY, AU, and GU, and we'll jump around for certain months just to show some examples. But to begin with, we're going to probably jump right in with UJ. And as I progress, I'm probably just going to transition to another pair just to show you it's no difference amongst the pairs. They all are formulating the same way. Hopefully, you guys can see my screen. I'm not the best technical guy. So we have a Venn diagram. I know some of you guys haven't seen this in a while because most of us are probably out of school or not still, furthering higher education, but got a Venn diagram, throwing it back here. So we have on the left bullish months and then on the right bearish months. And then we have in the middle where they meet and some of their, similarities. So on the left, you're going to see that the best buy setups forms below the monthly open. It creates higher swing highs and higher swing lows. There are going to be points in time when it forms the PDA rate a busy, or also known as a fair value gap, coined by ICT, and it trades away from down days. Then on the right, we have the bearish months, which is completely inverse to what I just said. So the best sell setups form above the monthly open. It creates lower swing highs and lower swing lows. It forms SIBIs or fair value gaps, and it trades away from up days. Now, where they both align and what they have similarly in common is they lure traders to the wrong side. So there's a protractionary phase or a Judas swing on retail traders, and it generally happens within the first week or maybe even the second week, but normally it's the first week of NFP. And then secondly, it creates inefficiencies. That's what they have in common as well. And just to backtrack on what I said before about the first week NFP in like just some background information as because this is going to be a long video. And I'm basically expressing all the information and the knowledge that I currently have today as a trader and what makes me successful and what I think could make other traders perform better in their trading career. The first week of a trading month tends to be deliberately enticing traders to the wrong side. So it's as if they are enticing people to come in, put their money into the market, bet hard, gamble on NFP because we all know it drops at 8:30. Yeah, it's 8:30, I believe, or 9:30. I could be wrong. I think it's 8:30 a.m. New York session time, New York Eastern Standard Time as well. Everybody knows that news event normally has an injection of volume, and everybody is betting hard. At that point in time, most people are either blowing accounts or they're getting lucky and they happen to get it right. Most of the times, most people burn their accounts. That's just the inflows of the way it goes. Now, to continue, I think the next slide is going to talk about a statistic as well. So, in the context of empirical research, it has been observed that significantly majority, ranging from 65% to 90% of retail traders, demonstrate an inability to achieve profitability in their trading activities. Now, this is a high percentage. This is a high failure industry. Everybody in this industry is failing. The people that you see succeeding are very far from none. There's not a lot of people succeeding in the trading community. And if they are succeeding, the ones that we actually see within these social media platforms, most of them sell courses. Most of them have clickbait titles. Most of these guys don't really trade. Most of these guys scam people. I mean, it's a known fact. And the source I have here on the right is Forex.com. It's a live broker based in the United States. It's all regulated, the CFTT. You can see here, and I quote, this is all the quarterly data that they had for the year or statistically broken down because they have to provide this information about traders that sign up. And it says the performance of non-discretionary retail traders, Forex customers' accounts. So as you can see and you read here, sure, can I zoom in? There we go. Hope I'm not messing this up. I said I'm not the best technical guy. So it says for the calendar quarter ending September 30th, 2023, there were 36,744 active non-discretionary trading accounts, which 28.8% were profitable. So only 28.8% were profitable and 71.2% were unprofitable. And that's as of the quarter, ending quarter of September 30th, 2023 of this year. Only 28% people within Forex.com. Now, this is just one broker. Remember, there's many other live brokers out there. There's many other unregulated brokers out here. I'm just showing you one small piece of the puzzle here from a regulated broker. So only 28% were profitable and nearly 71% were unprofitable. For the calendar quarter ending in June 30th, 2023, there were 37,831 active non-discretionary trading accounts, of which 28.38% were profitable and 71.62% were unprofitable. For the calendar quarter ending March 31st, 2023, there were 37,082 active non-discretionary trading accounts, of which 31% were profitable and 68.8% were unprofitable. For the calendar quarter ending December 31st, this is last year, 2022, there were 35,714 active non-discretionary trading accounts, of which 31% were profitable and 68% were unprofitable. So as you can see, there's not a lot of people winning, and it's a known fact. So when people do show you things in chats and telegrams or all these other social media platforms that they're making money, that's cool and all because everybody wants to feel, applauded and they want to have their flowers, they want to show off to their trading buddies like, yo, I made money. But at the end of the day, within that span of 6 months, they typically blow all that money or they lose all the returns or gains that they made. And it's clearly shown here with statistics. I saw on a Reddit post before that someone said that it's a myth that 90% of retail traders are failing, and it's not a myth, and it's actually true. The data is actually being shown. A lot of people do quit trading forex. A lot of people do quit trading futures or whatever commodity, whatever asset class that they trade. They end up quitting because they aren't successful, and it's a low win rate for a lot of people to actually be successful. So that's just a statistic I wanted to put out there. My hypothesis, though, I believe that's what the next slide is. Hopefully, this didn't freeze. Okay, my hypothesis was why do retail traders fail. And my common answers are there's no prerequisites to this. The level of entry of trading is minimal. You don't need much to trade. It's not like you need a master's degree or a PhD or a GED or a high school diploma or some type of education to actually start trading. All you need is to be of age. I believe so. I don't know if there's an age limit, but I'm assuming that you have to be of a certain age. You have to have some type of capital, and it's very minimalistic to get into some of these live brokers or even unregulated brokers. So it's pretty easy. The entry to getting into trading, it's so easy. Anybody can trade. As the years progress, thousands and thousands of more people are trading futures, FX, options, commodities. There's a lot more traders in the world now as people are getting more, advanced and technology is expanding and people are communicating more around the globe. There's a lot more traders every single year joining, leaving, joining, leading. And it's just a common thing that this is a reason why a lot of people fail because the entry to get in is very low. You don't have to hurdle over something heavy and prove to these people that yo, you can trade. I'm a professional trader. They're gonna take anybody's money, whether or not you're professional or not, or profitable or not. They're gonna take your money. That's the whole point of the game. Now, the second thing I said was poor psychological discipline. So people are either lacking skills to manage and cope with emotions. We are human beings, and almost literally 90% of traders are males. The rest are 10% or 5% or 3% are just females. So majority of the males here are emotional. As much as people may say that males are not emotional, they're tough, they don't cry, etc. They are emotional creatures because if they were not emotional and they were objective, some of the things that we would see, all the fallacies that we see in trading, wouldn't exist. We all would be probably a lot more sturdier in our trading program. So we definitely are emotional as men or as males when it comes to trading. So there's a reason why we fail. Psychological discipline is lacking. And last but not least, the quality of education. So the source of their learning lacks substance and consistent results. So it all depends on where you find your substance of education. Some people, like I said, there's a big world of ICT. There's some a big people of Wyckoff. There's a big people of Larry Williams. There's a big people of SMC. There's a big people of all these other communities. Retail logics, harmonic patterns, and some of them are qualable in the substance of results, and some are not. Some perform way better than others, and some just totally don't perform at all, and they don't show consistency enough. The setups may be there, but they're just not consistent enough to be profitable. And just a quick side note as well, I said numerous videos on platforms such as YouTube showcase traders making assurances of guaranteed profits, promises of swift wealth accumulation, and assertions of 100% success rates with their trading models. Nevertheless, viewers of these videos rarely share instances overnight success after watching them. So what I'm referring to there and what I said there is that if you literally go on YouTube and you look at a lot of the channels and a lot of the things, like you just do a quick like forex search, how to trade forex, you're going to see a lot of uh break retest, harmonic patterns, head and shoulders. You're going to see a lot of RSIs, moving averages, Ikomoku clouds, um moving averages. You're going to see a lot of these retail based logics, and you notice that if everybody's learning this stuff, why aren't they successful? Why aren't the trading plans that these people are setting forth telling people, guaranteeing, hey, make $100,000 tonight using my model, guaranteed? Oh, we'll pass every prop firm for you, 100% guaranteed. Because if that's the case, everybody would be doing it. There wouldn't be that statistic of 65 to 95% of traders losing. Everybody would be profitable. So please do not fall for scams. Do not fall for people clickbaiting you into content that is just nonsense. Most of the stuff people are doing or just content creation. They're making content to lure people in. They're buying the diamonds, they're buying the cars, they're going to the clubs, they're going around the girls. Like I said, the trading community is male dominant. So they're doing a lot of these things that attract the male attention, distract the male attention to get them to continue to be monetized where they're not bringing no value. Oh, I just brought this new Lamborghini, with the profits I just made. No, you brought the new Lamborghini off of the mentorship that you sold to thousands of people around the world. You brought this new mansion or new house because of all the garbage regurgitated content that you sold to many people. So please be cautious and be wary. I know we've as traders, at least for me, I could say I've been a victim of trying to get fast money, fast cash, taking signals. That stuff doesn't make any sense and it's not real. It doesn't bring any consistent profits. There's not one person that can sit here and say that they paid for a signal course and they are now a successful trader. It's automated for them. They make money overnight by copying this other guy's trades. It's not possible. It's all fraud. It's all a paradigm that everybody's stuck in and trying to make quick cash in this world. Take your time. Wealth is generated slowly. You're not going to make $1 million overnight. That's just how it is. So, some evidence sources from TradingView, of course. Just went on TradingView quickly. You can see this stuff everywhere. It's pretty common. You can look on the top left, the bottom left, the top right, bottom right. This is what most retail traders charts look like. You're going to see a lot of lines. You're going to see support and resistance. You're going to see harmonic patterns. You're definitely going to see retail logic like head and shoulders, inverse head and shoulders. I'm not familiar and versed with all these things because I've never even taken up the route of that, and I had the luxury to not get involved in that. But a lot of people start off trading like this, and it can steer them in the wrong direction. So I just now want to break into the charts, and we're going to go through all the examples that I want to talk about and how I read price action without any indicators, without support and resistance zones, without harmonic patterns, without indicators at all. I'm going to show you exactly how I believe the market moves and how simple it is to read it and how you can be successful as a swing trader, position trader, or even a scalper. Once you figure out the trend, you have edge. Period. If you know where the trend is heading, you have edge against the market in all conditions throughout all 12 months. So let's just dive right into that. Like I said, this is a male dominated industry. Think about how these people convince people to watch their content. They go to the strip clubs, they buy the cars, they buy the jewelry, they got this, and everybody just sits there and watch their content, but they're not learning anything from these people at all. It's all based on lifestyle. I don't care about these people's lifestyle. I want to learn how to make money. Stop showing me the cars. Stop showing me the bust down APs and Rolexes. I want to learn money. They're not teaching people how to learn money. They're making people watch their lifestyle. That's not that's not right in my eyes at least. So starting off with the chart, we're gonna be looking at UJ and we're gonna look at the beginning of the year. So let's go on the monthly chart. So this is 2023. Can't believe it's already over. Now, just looking at this chart, you're going to start to notice things. You're going to notice that there's wicks, there's opens, there's closes, there's small candles, there's large candles. And the way I like to decipher it and to begin with is the opening price. The opening price is fair value to everything. You don't need an indicator to tell you when it's overbought, when it's oversold, when it's in a premium, when it's in a discount, when to buy, when to sell. You don't need to because the market tells you it. Why would the indicator need to tell you? The price action and the natural candle itself is going to express to you when it's overbought and when it's oversold. So looking at all these candles, for instance, right? Looking at all these candles, look at the open at all the candles, whether it's up or down. At one point in time, you could see it was. Let's just take a look at this candle here, this down candle. At one point in time, let's move this over so we can see the whole wick. At one point in time, this candle was up and above its opening price, and then it dropped down, and then it came back and closed right there. Same thing for this, but vice versa. At one point in time, this candle opened here, dropped down for the entire month, came back to its open. Think about it. It opened, dropped, came back to its open, and then went past its open, went all the way up here, came down, and then it deceased. It died right there. That is really crucial. You got the open, high, low, and close. But the way it paints it on the chart can be confusing. But when you look at it in the way I am going to show you, it starts to make a lot more sense. There are only a few ways that the market is going to produce and start a trend. Let's go through a few examples. So we're going to look at January. Like I said, this is going to be a long one, guys. This is not going to be a short one. It's going to be a lot of talking, and everything I learned about trading in the last 3, 4 years is going to come out here and just going to spill out. And I'm going to explain everything to how I like to find things. So this is January. It's clearly a down month, right? So let's go back, and we're just gonna look at it in the most simplest terms. Let's get it all the way. So we're looking at the month. So it's essentially almost 20 days. So it's another thing before I go. Every 20 days, if you're writing down, fellas, and if there's any ladies in here as well, every 20 days, the market's going to be searching for a new liquidity pool. Whether that's buy side liquidity, sell side liquidity, it's going to be reaching for another liquidity pool. If it doesn't reach for a new liquidity pool within the next 20 days, odds are the only thing it's going to do is be stagnant. It's going to accumulate, it's going to consolidate for the month. Every 20 days, this is crucial, every 20 days. So that means there's a trading opportunity to make money every 20 days. There's going to be the market chasing buy side or sell side every 20 days. This range that I'm going to show you here, it's about, I think, 23 days, 22. So almost around every 20 days. We're going to start the month here. And I want you to keep in mind, we know that January, we saw it on the chart just not too long ago, was a down month. Think about the characteristics I talked about. Think about the characteristics I talk about a bearish months. Think about that. Keep that in mind as we go about this right now. It's a bearish month. It's hindsight, but hindsight exposes us so we could learn from certain movements in price. This is the opening price of the candle, January 2nd. We're about to be right in January again. This is the opening price of the month. Anything above this price point is premium, anything below it is discount. Ideal sell scenarios are going to form above the opening price. Ideal buy scenarios are going to unfold below the price. That doesn't mean, because I feel like a lot of people take it too direct sometimes. That doesn't mean as soon as price gets below here, you should instantly be looking for buys. Or as soon as price gets above here, you should be instantly looking for sells. That's not how it works. There needs to be some type of inflection of orders and lure and Judas swing on retail traders because there's a buyer and a seller. The markets are not just moving up and down. There needs to be a buyer and a seller. That's how this thing works. One person says, I would buy at this price, and the other person says, I will sell it to you at this price. And it keeps exchanging itself over and over and over again. Let's play this out and look at some characteristics. So we'll play it all the way out. Stop. First observations that you see when looking at this chart, you can see that it's a down month, of course, because you can see it closes away from its open. That's the close of the month right here, going into February. You could see it's a down month clearly. But where did the best sell opportunities come? Above the opening price. Every single time. Look at how sensitive price is every time price went either close to the opening price or above the opening price. A dynamic reaction most likely occurred. We could see the high of the month is here. Right there. That's the high of the month. Not everybody's going to be able to catch the high of the month. It is something that is very difficult to do unless you have been skilled or you have intuition and you already going in from December 2022 going into January or just going into a new month, you already anticipated certain levels that would line up for you to catch the high of the month. At most times, I don't catch the high of the month. I've only caught the highs and the lows of the month probably only 3 times out of my trading career. And I've been trading for more than 4 years. It's not something that happens often because you need to go in there with confidence and you're taking the risk to try and predict this is the high of the month. But nonetheless, let's just say somebody was able to catch that. Congrats to them. But let's talk about the other common people that are not able to catch that or not as agile in predicting, oh, the high of the month and where it's going to break a high and then sell off. Let's talk about how we could possibly read this going into the month. Let's bring it back to where price breaks a swing low. This is where it starts. This is where it all starts. Going into the month, you want to look to see if we're breaking any swing highs or swing lows. When we go into this month, we can see we break this swing high. Price comes up, breaks this swing high. After breaking that swing high, it's most likely should create a higher swing low. And it did. One, two, three. And that's the bullish trend formula. Now you should be possibly able to go into the market being confident to finding buy setups. But let's say, as you can see, it fails. That trend formula goes out the window because it's not guaranteed that you're always going to get the trend right with the formula. You have to continue with it. Price comes down instead, so it gives a false break. So a false break above this swing high. So price doesn't want to go higher; it wants to go lower. What does it do instead? Breaks a swing low on the daily. I want you to understand, I'm doing this all based off of the daily. You can do this on the weekly as well, but I prefer the daily because it's more detailed oriented. I'm on the daily, it breaks a swing low. When a swing low is broken, take this down, note this down. When a swing low is broken, that signifies bearish momentum. That means institutions are most likely stepping into the market and looking to push this thing lower. That's what's occurring. That is the potential direction of the market at this point. It breaks a swing low here. We can even see it even comes down and breaks this swing low as well. But let's just take our eyes to the most recent one that's broken in recent time where we are. Price breaks a swing low. At this point, In order for me to be confident that this market is going to continue trending lower, all I need to do is wait for a lower swing high. Now, this is where people will get antsy and get impatient because they don't want to wait for this. What do they want to do after seeing this large candle? I say this all the time. They want to chase the price action. They see the large candle going down, fear of missing out. Psychologically, the candles get us as human beings. They will, as traders, you guys, people, even me too. Sometimes I want to chase that because I'm like, dang, I missed that move. Dang, a whole day went down. That's 200 pips to the downside. Why couldn't I have caught that? You could have, and you will. All you have to do is be patient, though. A large range day comes around. Odds are, after a large day, a small range cycle will produce itself. It's just probabilities. Not to say it's guaranteed. Everybody thinks, oh, it's 100%. Roll the dice. It's going to be 100%. No, it's not. Remember, this is trading. Everything is not guaranteed. Anything can happen in this market. Anything. What I need to see happen after the bearish momentum comes into play, I need to see a lower swing high formation after the break. Yes, there is a lower swing high here, but I want to see it form after this candle finishes forming. Let's play it forward. There goes my lower swing high here. One, two, three. And notice as well, what do we have that just formed in the marketplace? A SIBI. Sell side imbalance, buy side inefficiency. The market was inefficient in filling buy side. It sold heavy for one day, and the next day it didn't correct itself. It left it open. Another day sold off. So this is a void. There's inefficiency in the marketplace. It's also a market shift, right? Because it breaks a swing low with a fair value gap. It's the same thing I talk about with the Asian session model with the 15-minute swing high broken, then the 1 minute market shift, the fair value gap breaking the swing point on the 1 minute. It's the same thing happening on the daily. It's all fractal. Notice how price makes the swing high here, but it's lower. It's a lower swing high. Let's mark that out. If we can get it to mark out, we got a lower swing high. Now, this swing high is not confirmed. By definition, it is a swing high, but it's not confirmed. This is something I learned by Larry Williams reading his book, Long Term Secrets to Short Term Trading. It's not confirmed. The reason this swing high is not confirmed is simply because the low of this middle candles it hasn't been broken yet. But in theory, in definition, it is a swing high because the candle on the left has a lower high and the candle on the right has a lower high as well. So that makes that the swing high. So just follow along with the ideology. At this point, I should be able to say with more confidence as a trader, as a day trader, as a scalper, as a swing trader, the market is most likely going to continue lower. Selling opportunities will benefit me because I think the market in the next couple days, right, the next 20 days, the next 15 days, is most likely going to continue trending lower. What should I do as a trader at this point? I should look for sell opportunities. And I want you to also notice as well, notice where this swing high is forming. It's above the open. That's not coincidental. As we go through these month examples, you're going to see these swing points are forming and creating the best situational sell opportunities. Like I said, if you were the market maker and you knew that for January you were going to sell UJ, you were going to make UJ a down month, how would you do it? You would do it exactly like this. You would create swing highs above the opening price. Swing highs above the opening price. Swing highs above the opening price. There's three swing highs. One, two, three that form above the opening price. Those are all premium sell opportunities. All premium. At this point, after I confirm the bearish trend formula, swing low broken, which equals bearish momentum, plus a lower swing high. This one is lower than this one here, and this one here as well. So we got a lower swing high without breaking the previous swing highs or the most recent swing high. It's protected. That swing high is protected. They don't want to run the swing high. They want it to continue to go lower. They want to run what now? They want to run swing lows. They don't want to run swing highs. That's all the market is made out of. Swing highs, swing lows. Swing highs, swing lows. And if it's bearish, we are targeting swing lows. That's our primary objective as the market maker. If we are bearish, sell side liquidity is all we care about. We don't care about buy side liquidity. Yes, there will be moments in time where the market makers do a false break and do a buy stop raid, which is what occurred here. Buy stop raid above this swing high. Price comes up and then it goes lower. You're going to have moments in time like that, and you have to live with that. I try to tell people everything is not going to be perfect. You could practice to be perfect, though. You can get as close as you can to it, but you're never going to be able to predict certain moves. You're not going to have that 100% reading accuracy, but you want to increase your accuracy by following a simple program on finding trend. If you don't have a program to find trend, you're going to be lost. Period. You're not going to have an edge. At this point, I'm going to be looking to go short. When am I going to go short? I'm going to go short after up days. Why up days, Deontay? Because it's counter to the trend. And if it's going to continue going lower, the higher, or if I get a day that closes higher than normal, right, and closes up, I have an opportunity to sell at a higher price point. Even though price is above below the opening price, if it's going to continue the trend, it's going to have to move away from the opening price. It's common sense. It's not that, oh, you're in a discount now, I should only be looking for buys. That can work at times. But if you're going to be following the higher time frame trend, you're going to want to continue to go with it. Don't go against it. So let's wait for an up day. We got an up day the next day on a Friday. And some of these we're going to get into the day of week as well. We got an up day. What should we do the next day? We should be looking for sells the next day. Now, how do I tell traders to sell? If they're a swing trader or position trader, I tell them use sell limit orders or sell stop orders at the open and the close. You're going to use a sell limit, right? At the open, at the close of this candle on strength. So, meaning the next daily candle is going to open and move up into this price point and knock you in short on strength with your sell limit order. Down here on the opposite end, you're going to get in on weakness with a sell stop order. And you're going to hope to be triggered into the market short on strength and weakness. So it's a double combo. You can take one approach if you want. The less risky approach is obviously taking the higher sell position rather than selling down here. So if you didn't want to use a sell stop and you just wanted to use the sell limit at the close, that could be preferred as well. But if you're somebody trying to optimize and try to get as many entries as you can, two entries, there's only two entries that you're able to take if you're the swing trader or the position trader. As the retail trader or the intraday or day trader, what you could be looking for going into the next day would be selling above midnight opening price, selling above London open, selling above New York opening price, or even selling late PM session, Asian session, short. Let's see what happens the next day. We get an up day, which is cool, which means we failed. So the only order that we got limited in was this. At some point in time, and like I said, we're not going to talk about stop losses and TPs right now, but just for the sake of the video, it's an up day. It closed up. Let's say we took a loser. Great, because we're not always going to win everything. All right, so we have another up day. What does this mean? We have another opportunity to go sell. Because did we break any swing highs yet? No. Did we break any swing lows yet? No. So we're still short. The bearish trend formula is still intact. We're still short. What are we going to do? We're going to do the same thing. We're going to sell here and we're going to sell here. And like I said, for the intraday trader, they're going to just sell above midnight opening price or any premium arrays or any premium territory into IPTA true day after 12 a.m. New York Eastern Standard Time. What happens the next day? We get a sell. So let's say we get a winning opportunity there. So we were able to get triggered into the market short on strength. So it goes up and knocks us in and it comes down. So we're able to get a selling opportunity here. And let's say we're not even going to close it. Let's say, like I said, for the video's sake, let's say we're going to keep it open because I'm talking from my perspective of a swing trader. We're going to keep the trade open. Let's see what happens the next day. It continues to sell off. And it then triggers what? It triggers me in short here as well. So I'm now in the market short here. Let's see what happens the next day. We get an up day, which is okay. We would assume at one point in time we would have paid ourselves, right? We would pay ourselves, either move stop loss to break even or move the stop loss within profit. Another up day. What should we be doing? Have we broke any swing highs? No. So the momentum has not shift back bullish yet. We're still bearish. Let's try to find a sell opportunity the next day. It's up. Oops, oops. Did not mean to do that. Yikes. Up day. What happens the next day? We sell at the open or sell at the close or sell at the open. What happens? We got an opportunity to sell, right? Let's just say hypothetically we made profit that day because it's a down day. Let's go the next day. It's up. We lost. Let's say we lost money, right? Another opportunity to what? Sell again. There you go. There's a sell opportunity there for you. There again. 2 days in a row. After the update, 2 days down. Now that's the end of the month. Now, if this is January, like I said, January, most traders shouldn't be trading in the beginning month because it's going to pull you to the wrong side for the year, anyways. But you could see it's still going to follow a certain pattern. Let's move on to February now. Hopefully that makes sense. Hopefully I'm not moving too fast. But think about the characteristics that formed here: swing high, inefficiency. It's one, only one large inefficiency formed here. Sometimes there's multiple inefficiencies within the month, but generally there's always going to be one large inefficiency per month. I normally seen that throughout the year. I've always seen one large inefficiency per month, and you can see it's right here. SIBI price trades into it, and then it looks to sell lower. Now let's move into another month. Let's look into February. Now I'm gonna move after this. I'm gonna explain a lot in a lot more detail for the bearish side. I mean the bullish side because February is an up month. Just like I said, it's hindsight. I already know what happened. It's an up month. But after explaining this, we're gonna go through a lot of examples and we're gonna just keep going through them quick, 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 quick. And I'm just gonna keep showing you the same thing over and over and over again. And eventually you'll start to see how easy it is to read daily bias and how to make money intraday or swing trading. In my personal take, I think wealth in trading is built on being a swing trader. Day traders suck. Just letting you know that right now. Day traders have trouble trading. Scalpers have trouble trading. Too much pressure, too much risk, too much things going on. Swing traders have a lot more less risk at hand because one, they're trading on a higher time frame, so they're already forced to risk less than a scalper. A scalper is going down on the 1 minute and risking full margin every time and blowing accounts quick, 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 quick. The swing trader is the marathon runner. The scalper is the sprinter. They could lose the race. The marathon runner can be in last for like 2, 3 miles or for the fourth lap. But then the last lap comes around, that marathon runner can become, the top three runners that win the race, that wins bronze or silver or gold. The scalpers do not tend to be that. That's just why I prefer the swing trade. Just my opinion on it. This is the opening price. Like again, the ideology. The opening price is crucial to understanding where price is overbought and oversold. You are the indicator. Do not put no indicators on your chart. It makes me sick when I see indicators on people's chart. Even some of my close trading friends, I still see indicators on their chart. And I'm just like, dog, you don't need it. I just know you don't need an RSI. You don't need a moving average. It doesn't help you. It's a lagging indicator. Opening price for the month. That's February. Let's play it out now. Just watch price going into the month. Disregard everything left to this chart right now. I just want you to look at what's going on going into February. Follow along. Let's play price forward. What is this here that just formed? First thing that we notice, a swing low. That's interesting. A swing low forming on the first week of the month. And what happens on the first week generally, right? Let's put the economic calendar on real quick. What's this? Non-farm payroll, the first week. They get traders on the wrong side. What does everybody probably thought was happening? is going to go short. I used to tell people in the Telegram channel, non-farm payroll is most likely going to push in the direction the market truly wants to go for the rest of the month. Something a lot of people don't think about. Non-farm payroll tends to show the real direction of where the month is going to go. Non-farm payroll ended up. The day of non-farm payroll pushed everything back up. Retail traders are probably banking on what? Shorts, right? Let's go short. I see 3 down days. This is just me thinking, thinking as if I was a retail trader somewhere around the world. I see 3 down candles, Oh my gosh, it's bearish momentum. Oh my gosh, it's selling pressure. That's what some of these people actually think, which is ridiculous. And it is not logical. And then they have the candle pattern sticks. Oh, doji, shooting star, hammer, all garbage, all garbage. Price comes down. 3 days down, they think it's going to go short. Non-farm payroll smokes them. They go full margin short, it goes up. In that formation, it creates a swing low. 1, 2, 3, swing low. Now, think back to the characteristics to a bullish month. A swing low formation is going to form below the opening price of the month if it's going to be bullish. It already gave you one. It's an early indication. It's indicating to you. People are not paying attention because it's so subtle. It's so small. It's something that doesn't even seem like it's important, but it is important though. Because this is the process and the way it breathes, how the market actually moves. Swing low here. What does it do in this formation up here as well? Let's get rid of all this. It breaks what? A swing high formation. Like I said, that first week, I tell traders do not trade because it's going to most likely pull you to the wrong side. It's going to pull you to the wrong side. I could almost bet 60 to 70% of the time, that first week, retail traders are going to get enticed to go to the wrong side. It happens all the time at the beginning week of the month. You can look at every single month. That's what I showed you at the beginning of the chart. When we started showing the monthly chart, I showed you the open, high, low, and close. That's that first week that's getting traders on the wrong side. It's normally the first week or even sometimes even the second week. The first and second week, they're getting traders on the wrong side. They're getting ready for their longs or they're getting ready for their shorts. That's what they're doing. They're getting ready for longs. You could tell. 1, 2, 3, and they break a swing high. What happens after you break? What's the meaning of a swing high being broken? That is what? Bullish momentum. Let's write it down. Swing high broken, if I can spell, is bullish momentum. That's what that represents. That's all it is. Now, at this point, what should you be thinking to yourself? Oh my gosh. This is the way I think. Because like I told you, this is the point of view and what I see. This is what Deontay thinks when he trades. Whoa, a swing high broken? All right, I need to pay attention. That means at said point, a, fa- a fair value gap to the upside, right? A busy is most likely going to form, or I need to wait for a higher swing low. Let's see what happens. What is that? Fair value gap. How did I know that a fair value gap was going to form? Because it's something that happens pretty often. It's a pattern that happens. They most likely break swing points with a fair value gap. And if they do it with a fair value gap, it's intentional. That means they're most likely going to do what? They're going to fill this inefficiency with a higher swing low. It's the same thing, but inverse to what I just showed you. What is this? This is a fair value gap, but it's a busy. It's a buy side imbalance, sell side inefficiency. This is a very large inefficiency as well. It's not a small little fair value gap. It's not something small. This is let's see how many pips it is actually. Hmm, hmm. Over 200 pips. This is not something small. What should I wait for now? A higher swing low. Let's play it forward. Let's see what happens. We got a down day. Interesting. What happens the next day? Up day. We got a higher swing low. Is it confirmed? No. But in theory, in definition, it is a swing low. Let's continue with that. We got a higher swing low. Please follow along, folks. I know it's a lot, but if you want to learn this stuff and you want to see it from my point of view, you gotta just be attentive. You know, we have short attention spans. 2023, 2024, human beings' attention spans have been declining. Realize why they're making short paced content, reels, TikTok, YouTube shorts, because people's attention spans have been shortening over the years, over the decades. People can't focus. They want short, quick delivered content. Focus. Higher swing low. We're going to wait for what now? After we got this swing low. All we have to do now at this point is wait for what? Most likely a down closed candle. We need to see a down closed candle. It would be preferred that this candle be broken, in my opinion. So let me do it in the way I would prefer to do it. I would prefer this high to be broken. I really want the confirmed higher swing low. This still makes me feel a little antsy because since it's not confirmed, it doesn't take much for price to come back down here and sweep this low. It wouldn't take too much for that to happen, and I wouldn't be surprised if it does. See, I'm look, it runs that swing low. It runs that swing low. So it kind of throws the formula out of whack. Like I said, it does happen. You're going to get sell side raids in a bullish trend. You're going to get price breaking previous daily lows and continuing higher. You got to know that. You got to live with that. Which could also mean those are probably good opportunities to buy as well in an uptrend. If price breaks a low, that might be a good opportunity to buy after breaking the low. As you can see here, price comes down, breaks that low, shoots all the way back up. But continuing with the trend, you can see here, price is now making what? After this buy stop braid, like I said, it's not always going to be 100% perfect. Let's just remove this. This swing low is still higher than this one here. We did have a raid here, and we'll say, hey, things happen, like we said. We have a raid here on that low, but price still prints what? A swing low, still inside what? This inefficiency. So it's not like it's unexpected that it wouldn't fill this inefficiency a little more. It's still a large inefficiency. We don't know how much of this inefficiency it would fill. I think that's something I struggled with, and I think a lot of other ICT traders struggled with. They didn't really know how far into the fair value gap it was going to fill, especially with something like this on the daily time frame. You got to risk small. So at this point, we still got the higher swing low and the break of a swing high. What should we be waiting for at this point? Down days to buy. Let's wait for a down day. Not yet. Not yet. We got one. We got a down day. What should we do after this down day? We should buy. We should be looking for buys. Let's see what happens the next day. Got a nice buying opportunity. Like I said, just for the video's sake, let's say it's up. It just closed up. Let's say we caught a winner. We can see throughout the day it went up. So let's say at one point in time we were able to catch profit. It's an up day. Let's see what happens the next day. Does it continue going up? It does. Does it keep going? Let's see. It still keeps going up. We got another down day. What is that? Another opportunity to potentially buy. Let's see what happens the next day. Notice as well, the candle is small. See, these are things I like to look at. The candle is small. It's a small down candle. It's a small range candle. People are uninterested of UJ. Goes back to this. That large candle here is the bone. They're throwing the bone for the dogs, for the guys. Here, chase it. Chase price. Come on, go along with me. Some people will get profit, but there will be people that will inevitably get burned as well because there's going to be a retracement at some said point. We got a small candle right here. What could we anticipate happening the next day? And it's down. We can anticipate an up day, and we can anticipate it being large. And we can anticipate it being large and an up day because of the day it's gonna form on. It's Thursday. Look at that. Ideal trading days of the week. So you got to be really niched in. You got to be specific. These are the little details. It's a Thursday. The ideal trading days are Tuesday, Wednesday, and Thursday. This lands on a Thursday. So I almost have 20/20 vision and I have odds in my favor. I'm trading on an ideal day. I have the bullish trend formula still supported behind me. I have a down candle and I have a small range day. And I'm going into Thursday. How many more confirmations do I need? I kind of have the market makers on my side at this point. I should be expecting what? A dynamic large day tomorrow. I should be making buku money tomorrow. Not guaranteed, of course, but I should be most likely in favor of an up day that's large. We don't get it. We get a down day. Let's say we take the loser. Another down day. Should we expect what? Still price to go up? Yes. Finally, we get that large day. There we go. We make all that just because we had to wait for down small candles. That's why you can't be looking for trades every single day. And this happens to be on a Friday. You can't be looking for trades every single day. But notice the trend again. Down candle, up, up, up. Down candle, up, up, up. Down candle, up. I think there's a pattern here, and it's very natural to see it. It only takes some time to sit down and observe. People can't observe this stuff when they have all the indicators on their chart. They can't see this stuff when they're thinking about harmonic patterns. They can't see these things because they're just not taking the time to sit down and actually learn this stuff. I sat down for months just looking at the chart bare for years, and it finally clicked. I was like, wow, it's right in front of my face this whole time. It's not a perfect system in the way to catch it because I don't know all the answers, but I know at least enough to be profitable. I know at least enough to put the odds in my favor to go and bet against the house. Normally, the house, when it comes to certain gambling games, right? Casino games, the house always has the favor, always has the higher odds of winning. You're not going to beat the house. But if you know certain strategies and you know certain strategics and you know the cards, you know the decks, and you know this, you may have a edge against the house and you can beat the house and you can take money from them. That's the same thing you got to do here. Now that's February. That's February. There you go. And that's UJ. Now let's change it to some another pair real quick. And now I'm gonna speed things up a little bit here now. Let's go into GU. Right? Let's just go into GU. I don't care what month it is. Let's just go back. Let's go. I don't care. It doesn't matter the month because we could process it. We could just process it. Look at the month. We're in June, right? We're about to go into June. Like I said, exclude everything that you see to the left side of what happens before June. Go into the month with a fresh mind. The only reason I'm saying this is just to keep it simple because everybody can say, "Oh, what about this?" But what about this? Of course, we can always talk about what ifs, what ifs, what ifs. But let's be objective here. Everybody wants to be subjective. Let's be objective in what we are seeing in price action. Everybody wants to say, "Oh, but what about this? Oh, what about that?" What Be objective for once. You're worrying about too many things. You got to keep it simple. The more things you keep worrying about, the less profitability and the less things you're going to be able to see in the chart. You're too worried about this and this and that. Keep it concise. Price goes forward. That's the opening price for the month. That's June's open. I'm not even going to write it out. I'm just going to keep it as a black dash line. That's the opening price. It's black lines. The opening, I got to write it out because I know some people want me to write it. That's the opening price. Play it forward. Let's see what happens. Look at how it drops down. It's only the first week of the month. It drops down instantly. Drops down. Drops down. That means NFP occurred here. Drops down. Here. We got a swing low formation. 1, 2, 3. And it's also confirmed. As you can see now, it's different. It's confirmed. Why is it confirmed as a swing low? Because the middle candle's high is broken right here. It doesn't have to close above the high. Everybody keeps asking that question. Doesn't have to close. It's like you're playing American football. Once the football crosses the plane of line, it's a touchdown. It's done. It's purged. It's taken. It doesn't need to have a strong close above the open, in my opinion, at least. In my experience of trading, I don't think it has to. Once it breaks that high, it's broken. You can't take that back. It's broken. It's already done in history. They can't re-edit this and say, "Oh, it wasn't broken." No, it's broken. So it means something. Just because it breaks it and then falls below it, I don't think it doesn't make it unimportant. It's important. It still breaks it. So that's a swing low and it's confirmed. So let's mark that off. It's a confirmed swing low. Perfect. What do we have above that swing low? We have a swing high. So instantly, in my mind, you need to start thinking almost predictive. If it's gonna go up, it needs to break a swing high, and it needs to protect swing lows. It needs to protect swing lows if it's gonna continue to respect this swing point here. One, two, three. If it doesn't respect this swing point, like I said, got to think in probabilities. Only two things could happen. If it breaks this swing point here, it could be a sell stop raid to then make a lower swing high and then potentially make a lower swing high, make a lower swing low and then a lower swing high to go lower. That's one scenario. That's only one scenario. That's why you got to be fluid. You got to think about how would the market do it. You got to really be inquisitive about these things. And it comes with experience. You just got to watch the markets over years, over time. You'll see this. Price comes down. If it breaks this low, it could only be a sell stop raid, and then it could continue going higher. That's another scenario. I feel like people think, oh, that can't happen. It can. You need to be open to these options. People are so one dimensional. You got to be fluid in this market. You can't just be like, no, that's it. It's done. It's never gonna go back up to the high. I have people, not to say, but I would have people debate me in my direct messages and saying, "Oh, it's not gonna go up here." I'm like, "No, it can. There is reasonable opportunities for it to still go there. Who's to say it's gonna continue going lower? You have to you have to be open to all possibilities. It's not guaranteed. Everybody wants to be right about the direction of the market, but it's not guaranteed. I get it wrong, even with the trend formula. You could clearly see the last two examples. The last example, there was a hiccup in the trend formula because that's just the nature of the market. I ain't gonna get it right. I'm trying to get as close as possible. Price creates a swing low. Let's see what happens next. Starts trading up. We get now a large candle up. Breaks what? Swing high. Same thing every single month. This is June, guys. Another month. Think about the way it's processing itself, its lifespan. It's very similar. It's not always going to be exactly the same. What did I say last example? Swing high broken is what? Bullish momentum. Bullish momentum. Simple. Now to be confident that this bullish momentum is going to continue to lead into a bullish trend, you need what? A higher swing low. Let's see what happens. And we also got what? There we go. Look at all the characteristics. I told you it's always one or two, always one or two fair value gaps that form inside the month. There it is, fair value gap on the daily. Notice I didn't change none of the time frames. I didn't go to the monthly. I didn't go to the 4 hour. I didn't go to the 15-minute time frame because I don't need to do that. Don't need to. What is this? Odds are, as you get experience, you're going to realize that odds are it's going to create the swing low inside the inefficiency. It's a no brainer. It's a no brainer. It's most likely going to create the higher swing low in this inefficiency. So if you are a little more aggressive, you could get the jump on the market and try to catch the turn. But if you are not as aggressive and you want to be a little more conservative, you wait for that swing low to be confirmed. Boom. Higher swing low confirmed. Done deal. This market is bullish. There's no way anybody could sit here and convince Deontay that this market is now bearish. It's done. It's bullish. But instead, what will I see on TradingView on the forums? I'm going to see people post, GU, harmonic head and shoulders, reversal pattern. What? That doesn't make any sense. And I don't mean to be mean or to belittle anybody, but it doesn't make any sense. When you can see these little subtle fingerprints, when you can see these subtle footprints that the markets are leaving behind. That's the whole reason why I made my whole logo and my branding a fingerprint because it's all about the small little details that they keep leaving behind. It's a little fingerprint here, it's a little fingerprint here, but nobody's picking up on the forensics. Nobody's picking up on the little details. Higher swing low, but the indicators don't show people this stuff. Higher swing low. Look at how the market just wants to continue trending. It's doing what? It's running away from down candles. It's running away from down candles. And in theory, we could use the ICT what? Bullish order block theory. If price were to return back down to this down candle, that could be a buying opportunity too. There's many ways you could look at it. You don't have to be really one dimensional. There's many ways you could use the concepts because they all have fractal ideas and they all have confluences and they tend to magically align. It's so weird and interesting. This market is alive and coded, ones and zeros. It's all coded. Price continues to go up. All we're looking for is what? Probably a down day. We finally got a down day. We do also have a large inefficiency here. So that would be something to consider. But just going off of the methodology and the ideology, we got a down day. What should we be looking to do? Buy. We should be more confident to buy the next day. We took a loser. That's fair. Down day. What should we be looking to do? Buy. It's all that a win because it's just an up day. Next day, down day. What should we look to do? Buy. We lose. Hey, it's cool. Another day down. We lose again. This is the life of the market. Up day after a down day. Cool. We take that. Large down day. Down day. Nah, why did I do that? I hate when I do that. It just ruins things. Down day. What happens after that down day? Up. But as you can see, look at every down day and look at how it's easier to predict and have a little more odds in your favor that the next day may most likely be up. Every month is not going to be the same. Every month is not going to produce the same results, of course. That's the whole point of trading. You ain't going to have the same 6% compound every single month, or every 3 months, you're not going to compound 6%, which is the difficulty of being a trader. There's risk involved. A 9 to 5 is guaranteed, right? A 9 to 5, a salary job is guaranteed because you show up to work. Trading is not guaranteed. Just because you made 30,000 in 1 month does not mean you're going to make 30,000 next month. You may lose all 30,000 in the next 2 days just because you wanted to revenge trade. Something that simple. Trading is difficult. 65% to 90% of traders fail. It's difficult. It's not easy, but we all are in it to win it. And you got to be able to read these things. Let's go into another month. Clear this off. Going into July, into August. Very good trading month, too. Play it forward. Opening price. Here. Done. That's the open. There we go. And we're not even talking about IPTA here. Notice I'm not even incorporating all that other stuff that I incorporate. We're just talking about reading price action raw. Because I feel like nobody takes the time to do what I do. Take the time, read it. What is that? A swing low. Once again, same characteristics. A swing low. It's a bullish month. Yeah, I could already tell it's a bullish month. A swing low forms within the first, let's see, it's the first week, July. Happens on the nope. Happens on the first week. Yeah. Happens on the first week into July. A swing low. It's got to be bullish. With my experience, I most likely know it's going to be bullish. Swing low. What do we break? Let's see if we break any swing highs. Do we break any swing highs? We do. We break this swing high and we break this swing high. That's bullish momentum. What should we wait for? Higher swing low. You got to be patient. People are going to be upset about missing all this, of course. Like I said, if you want to tweak the model and you want to say you break a swing high, you going long after that, go ahead, do that. You don't have to precisely listen to exactly how I'm doing it. I'm just transcribing it and showing you what I would do. One, two, three. Finally got the higher swing low. You'd have to wait a couple weeks. Got to be patient. But no trade is no risk to your equity. Remember that. If you don't trade, you don't take any risk. As soon as you click buy and sell, there's a possibility you're gonna lose money, my man. This is how it go. After this, confirmed higher swing low, because that swing low is higher here. I'm going to look for what? Possibilities to go long, wait for a down. The obvious way is to do it. I would wait for a down day. Down day, I would look to seek to try and buy after this. This may not be realistic because it's a large candle down in this example. It's a large candle down, but just sticking to the theory and just the ideology and the hypothesis of buying after a down day. Let's see what happens. Possible up there. There you go. So there was profit here. So I had to wait a lot of days just to guarantee myself this one up day to put favors in my odds. People can't stand to wait too long because they want to make money now, 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 now. And that's something that you will battle with. Down day, down day. And that's the rest of the month. But notice the characteristics in the price action. It's very similar to what I was trying to show in that Venn diagram. You got a swing low that forms below the open. In here, we don't have any fair value gap that causes the market shift or fair value gaps that break the swing high, but we do have fair value gaps here. We got one here, a very large one up here, very high away from the open. And then price comes down, refills this what? This buy side leg up, comes down into it, and then trades on. Let's just look at another pair as well. So we're gonna look at, I think it was AUD I had on that chart. Hopefully it is. Let's pick a random month. It doesn't matter the month. Let's pick September. We go into September. Because I want to show ample examples of this. Because it's the nature of the market. October. And you need to see markets where it's sluggish or it's fast paced. You need to experience that. There are plenty of months. There's 12 months out of the year, at least one. And obviously, I'm being very minimalistic. At least one out of the whole year, one of them is going to consolidate on you. The pair that you're looking at least 1 month, you're going to run into a month where it consolidates. And it's going to be troublesome. It's going to be troublesome. Just being honest with you. That's the opening price here. You can see a swing high already forms above the opening price here for September. One, two, three. Swing high. Odds are, being inquisitive and just being experienced, I would say, oh, this is probably going to be a bearish month. We had what right there? Non-farm payroll occurred what right there on Friday, and it went down. So that may be the true intention of the market. See what happens if we break any swing lows. Quick displacement to the downside. Notice as well. Up day, down. Up day, huge down candle. Small day, large candle. That's a very natural thing that occurs. Probabilities. What day does this occur on? A Tuesday. Look at that. This large candle happens on what? A Tuesday. It's important to try and pick the days you're trading during the week because you can be able to catch large days like this. And we would most likely want to catch these large days on Tuesday, Wednesday, or Thursday, like I said. Here, you can see we break a swing low here. Just not to forget, we have a swing high up here. Swing low broken, swing low broken. Multiple swing lows are broken here. So what we would assume, bearish momentum is coming into play. Notice it doesn't close below this one, but it closes below this one. Some people would argue, oh, but what about it not closing down here? It broke it though. It just broke it. We would wait for what? A lower swing high. Also, in the means of that, what happens too? We got what? SIBI right into the second week of the month. We got one right here. A SIBI. So something we would look for is what? Maybe a lower swing high is going to form in here, and we could probably get a lower and short opportunity to go short. Let's see what happens. Price taps it. Trades basically regains and rebalances the whole area here. I don't like that. It's showing on the candle. Sorry. Swing high. It's not confirmed because the low is not broken, but let's just mark it off as the theory. It's a lower swing high after breaking a swing low. You see what happens? Price starts to go lower. And then it breaks what? It breaks the swing high again. So what happens? We got to go back. We got to continue to follow the trend formula. If it breaks a swing high, now we can get rid of all this noise now. If it breaks a swing high, what happens? Bullish momentum is coming back into play. So we still haven't had a concise confirmation of a trend. We haven't had days where it continued to respect the trend formula. We were just in a bearish trend formula, but then it broke it. It went against it. It broke a swing high. So now I have to sit on my hands again. I have to sit again on my hands and wait for what? Bullish trend to unfold. I need what? A higher swing low to play out. In theory, if you're a little more advanced, you would say that this here, breaking this swing high, you also got the higher swing low already here. There it is. One, two, three, and also breaking the swing high within that formation together. So you got that higher swing low here already. But let's not try to be fancy and just stick to the strip. Swing high broken. What are we going to wait for? A higher swing low right there. One, two, three. That's the higher swing low. We're also below the monthly opening price. So we could potentially say, okay, maybe we are going to continue to go higher for the rest of the month. And maybe we will continue to get back to this swing high up here and target this swing high. So let's see what happens. We got a down day. And notice, look at how it just runs right up to the open. And then it pulls right back down. Can't be random. And it's not random because of what? It's this line here. That's the line in the sand, overbought and oversold. The market makers are using this, the algorithm is using this to find its best opportunities. Traders are probably trying to break out and go long. They sell it back down. And it sucks because everybody wants to win. And there we go. Look, we still don't even have a concise trend yet. Look at the market. Look at what the market's doing. This isn't a trend that's concise. You could even look back previously. Like I said, I didn't want to look back, but look back. The market's just ranging. Look at that environment. People will struggle in environments like that. We all will go through this at one point of the year. All traders will go through it. But the people that tend to do the best tend to filter their pairs better than others. That's what I think. I think people that are able to pick better pairs going into the next month tend to avoid certain scenarios like this. And this is something I dealt with. I'm not sure what month I did AU for 2023. I don't know if it was September. I'd have to go back. But there was a month I was doing the daily bias tracking and I was struggling. I was struggling live. It's not like I was hiding it from you guys. I was struggling trying to find the trend. I think it was this month as well. I think it was September. I was struggling. The market is stagnant. It's sluggish. It's in a range almost for the entire month. Like I said, every 20 days, the market's either going to go what? To buy side or sell side, or it's going to consolidate. Let's keep playing it out. We had that swing low broken. Like I said, say we're continuing with the idea. Swing low broken here, back down. Swing low broken. What do we need after breaking that swing low? We need a lower swing high. Do we get one? We get one here. One, two, three. That's your lower. Come on, work with me. There you go. That's your lower swing high. And back and forth do I go until I get a confirmed trend. I'm not trying to jump the gun on the trend. It's risky like that. This stuff is risky, guys. I just feel like people think that they're Superman and you just jump in the market. Yo, I'm gonna be bullish today. I'm gonna be bearish today. It's risky. You will end up losing. Because what if you're wrong? And what if you're risking 2%? And then what if you're risking 5%? It's a big deficit. And risk management comes into play as well. People want to just bet the whole farm in one day. I got it. I know it's going to be bullish tomorrow. And then what happens? They're wrong. Instead of risking 5%, why did you not risk half percent? Then you're beating yourself up saying, dang, man, I should have just risked small so I could continue to trade. And I didn't blow my account. Now I got to wait to get funds again. And whatever the case I got to do to fund my account and get the new challenge or whatever it is. Risk small. It's a marathon. Got an up day after getting the lower swing high. Up day, we would look to sell. Like I said, it may not be ideal because it's large, but let's see what happens. It goes up. The entire month, imagine that. The entire month, look at how it's trading around the opening price. There's no range expansion. This month is literally small. Doesn't get super far from the open until at the very end of October. And this year, I know this is when October, I turned 25 in October. October was the hugest pivotal point of the year. If you go back and look at the year, October was where everything changed trend. All the quarterly shift in October was the strongest. And then everything from this point on for AU was bullish. GU bullish. NU bullish. UJ, U Swissy, UCAD, all that stuff went back to bearish. The stock market went bullish. Gold went bullish. US oil was bullish and then it went back bearish. Dollar went bearish. All that stuff started to change. But how do you anticipate those things? I was using IPTA, the quarterly shifts. That's the only reason I use IPTA. The main reason I use IPTA, according to what ICT had taught me in that first month 5 video in the core content, I think it's month 5 core content. No, it's core, I think it was just month 5. Um, it was because of anticipating a quarterly shift. How does a trader prepare themselves for the market to change trend? IPTA. And I was like, okay, I need to be using IPTA. And I applied it the way I saw fit and I seen results with it. And I've continued with it for the last 3 years. I've been using it that way. People ask me all the time, "Oh, you look back 20 days or 20 bars, which one is it?" I'm not sure. Someone had commented to clarify it for me, and I still don't truly understand. Like I said, I'm only human. It says 28 days, but I'm on the daily time frame. I think it's including other trading days or either calendar days or Sundays or whatever. But 20 bars on the daily time frame is 20 days. I think it's including, like I said, somebody could correct me if I'm wrong. I think it's including other calendar days that are not trading days. That's what I think is happening. Because if I'm on the daily and I count each bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That's 20 days. I'm on the daily. So everybody, there's people that comment, "Oh, but it's not saying it's not saying 28 you're saying 28 days. Which one is it? 20 bars or 28 days? It's 20 bars. It's 20 bars. And let's go into October with AU. Let's just go into October. October, you can tell, like I said, it's a quarterly shift. So it sweeps a low right here. If it was to continue to go lower, because according to the bearish trend, it needs to create what? A lower swing high. Because it breaks this swing low, it should make a lower swing high, protecting that swing high up here. That's what it should do. But does it do it? Let's see. Let's see what exactly it does in October. This is when things start to pick up. Like I said, September is a month that was sluggish this year. I'm not saying every single month seasonally it's like this, but just looking at it, you could see it was sluggish. Back and forth, back and forth, back and forth. This is a trading environment traders will struggle in, no doubt, because it's not trending. Traders make money when what? The market trends away from consolidation. There you go. Nobody makes not it's difficult to make money in consolidations. Just the nature of the market, and people just feel like it's, "What can I do? What can I do?" Look at a different pair. Look at a different asset class. There you go. You don't have to trade forex. Go jump into crypto if you want to. Go jump into gold. Go jump into commodities. Go trade feeder cattle. Go trade futures. Go trade something else. You don't have to trade FX if you see the market is just consolidating and you figure that this month seasonally it's going to consolidate. So we got a break of a swing low. If it's going to go lower, what should we expect? A lower swing high. We don't get any. Look at that. There it is. So now you finally get one lower swing high. It should what? Continue to go lower. And that's the entire month of October. So even more consolidation. Still ranging. This is still range bound. But they're accumulating what? Buy side and sell side sentiment. They did it for how many months? They did it for at the end of August. They stopped trending the market. You see the market starts trending down. It stops. 1 month, 2 months of accumulating orders, buy side and sell side orders. This is carnage. People are going mad here because they can't get a what's the word I want? They can't get a trend that is strong enough to continue. It keeps changing. It breaks a swing low, then it breaks a swing high, then it breaks a swing low, then it breaks a swing high. This is exactly what I'm trying to tell people. Just keep following the trend formula until you're able to finally get a successful trade and you're finally able to get into environment where the market starts trending. There are other factors to it, of course. Seasonality, the seasonal charts. I mentioned that all year round. Look at the seasonal charts. Compare what is AU doing during the month of October? What is DXY doing in the month of October seasonally? Is it most likely going to consolidate? If so, change the pair. Was last month a large range month? If so, do not trade the next month. Look for another monthly candle that is small on a different pair because the next month most likely will kick into what? A large range cycle. These same ideas that I'm showing you on the daily is fractal on the monthly time frame as well. Just looking at the monthly, looking at this daily chart, look at the opening price for the month of October. Every time it found a sell setup that was great, it happened at the above the open or at the open. Here, sold off. Literally the only best opportunity for October, in my opinion. Just looking at it from hindsight, this was probably the best sell scenario here. Not saying I caught this, but I'm just saying studying it, that was probably the best sell. Because everything else, you tell me where you found the best sell opportunity. Probably not anywhere here. Price just kept doing this. And this would mess with a trader's confidence because they're like, what is going on? The market just won't trend. It keeps staying in the same range. Yesterday it was here. Then it goes up. Then tomorrow it comes down back into the same range. Why is it doing it? Because it's just accumulating the market. They're trying to reaccumulate orders to push it to a certain direction. Let's go into the next month. Let's see what happens. This is November going into December. This is the opening price here. And I know I sound like a broken record, but it's the exact flow of the market. The exact flow. The exact characteristics and the traits that I'm pointing out, nobody points out. I don't hear nobody on these big channels, you know, that supposedly have millions of dollars, in funding and have millions of dollars in this and this six and a third, and they're a six-figure trader, eight-figure trader. I don't see them talking about concepts like this. I don't see them explaining stuff like this. What do I see them doing? Oh, yeah, we draw the supply zone and then we draw this other zone here. What are you talking about, bro? I don't even understand some of these people. We draw this zone here, and then I wait on the 4 hour, and then I jump in on the 5 minute, and then I go long and I make tons of money. No, you don't, because it's not feasible and it's not consistent enough. Market doesn't care about that box I just drew. Like I said, the box doesn't matter because look at the way I drew my box. If I would have told another kid, a younger trader, or some other person that trades to draw a box too, the box is not going to look like my supply or demand zone. It's not going to look like this box. They might draw it like this. That's demand. This large box instead of something small like this. It's so subjective, and I don't agree with that. I like objective measures when we all can sit here and agree and say, "Yo, this is the opening price." That's objective. This is objective metrics. That's not subjective. I'm not drawing a little box underneath here and saying, "Yo, supply zone, demand zone." That's so subjective. Doesn't make sense to me. Just funny things I see in the industry as I've been going about trading. Anybody with common sense or with sense of intelligence or as a thinking man would understand that that doesn't make sense and that it's not factual. None of the great thinkers in the world would ever sit here and say, "Oh yeah, what they're talking about is real," because it's not based on any data. Doesn't make sense. November, let's just play it all the way out. Look at how it comes all the way back down. And scene. So we had a moment in time where the only best buy opportunity happened at the beginning of the month, which happens. It happens. This does happen. So this is another thing you have to notice in the market. There are some months where the open is the low of the month. The open is the low. And sometimes there isn't a swing low that forms below the open in the bullish month. Or sometimes there's not a swing high that forms above the open in a bearish month. Sometimes the high is the open. Sometimes the low is the open. And this low here, price comes down a little bit below it. And then after that, that was the best. This is literally the best buying opportunity in hindsight. The best buying opportunity. Not most people would have caught that. But just to notice the idea, where are they buying cheap? They brought below the open. They did it on purpose. Price comes up. Now let's just continue with the characteristics. Price comes up, breaks what? Let's delete this right here. Price comes up and breaks what? A swing high. Zoom in. What does this stand for? Once again, bullish momentum. Still following the trend formula because people are so quick to abandon the model. They're not consistent enough. They don't ever see the results because, oh, this guy's model doesn't work. Let me jump to this other guy's model. Man, his model doesn't work. It's all about the timing. The model may work. You're just not using it at the right time in the moment. The time wasn't now for that model. It does work. You just haven't used it long enough to reap the benefits of it. Did I just disconnect from the Wi-Fi? Whew, I just had a heart attack. Price breaks a swing high. Bullish momentum comes into play. Don't do that. Get bright. Bullish momentum comes into play. What do we have to wait for? Higher swing low. Let's wait for the higher swing low. Higher swing low forms? Yes, we do. We have it. It forms close to the open. Realize it gets close to the open. So many times you hear ICT would say the best buy opportunities or even sell opportunities are just around the opening price, close in proximity to the opening price. Sometimes it doesn't have to be below it. It's in proximity. Got really close to fair value. and lower, which would be discount, created the swing low. This is a confirmed swing low because what? The high is broken. That's what I like to see. I mainly like to see the confirmed ones. That's something that Larry Williams said in his book. This swing low is higher. We could tell because this one is lower. There you go. We may be on to what? A bullish trend scenario. This may be another trend unfolding. And every time I see this formula play out, I'm like, wow, it's so easy to see the trend now. Look at how now look how the market just starts trending bullish. We got a down day. And let's also mention this too. We got what? The inefficiency, the largest one for the month. Like I said, it's always normally one or two that form to the month, a very large one. And it's so obvious. They just put it right in front of you and everybody just ignores it. At this point, like I said, what do traders do here? Chase this. They like to chase it. What happened the next day after they chase that price? What happens after this? They try to go along, market goes nowhere. They're like, "What?" I can only imagine what they are thinking in their head, what retail traders are thinking. "What? What did I do wrong? Oh my gosh. It was just running so fast yesterday. What happened today? What am I doing wrong?" You're not doing anything wrong. You just aren't informed. You just don't have enough experience yet. You just haven't noticed what's going. You're not doing anything wrong. It's most likely going to keep going long, but you have to wait for certain days. Most likely wait for the down day. Down day. What you should be doing now? Now you look for the longs. Boom. Longs. Like I said, if you're a swing trader, how would you get into these longs? Here and here. I'm not gonna talk about stop loss and risk management. That's something you could do your due diligence on because everybody's equity is a little different, and how much you can risk differs trader to trader. But the best spots to get into, as I've learned before, is the open or the close of the candle. So the close, you're using a buy. Listen to what I'm saying. You're using a buy limit order here. Here at the top of the open, you're using a buy stop order. Knock you in on strength. The other one is knock you in on weakness. Boom. You made profit all from here. Think about that. Most people are not able to get that entry for the next day. Most people are not able to get that entry. You're literally getting the entry at the open. That's around like late PM because the opening price for the daily candle is 5 p.m. New York Eastern Standard Time. And if it's dollar or gold, it's 6 p.m. It's 1 hour later. All for the FX currencies, 5 p.m. starts the next daily candle. So it's still technically Thursday, but on 5 p.m. on Thursday, the Friday daily candle has already been birthed. That's where you're most likely going to get your best buy opportunity as the swing trader, not the intraday trader. The intraday trader is going to probably struggle. The reason I say they're probably going to struggle is because the market may gyrate a lot more here, back and forth, back and forth, back and forth, back and forth, and probably knock them out for their lower time frame entry. The swing trader is most likely going to have a larger stop and be able to hold that drawdown, and then price runs up, and they're able to reap the benefits of holding longer than the intraday trader, which is why I prefer swing trading. Now, that's not to say after this day you have to close out because you don't have to. You could just move your profit to break even, into profit, whatever you want to. And the next day, you could continue to catch the trend. Tomorrow could be an up day. Wow, another up day with some size to it too. Not to say it's large or anything, but it's going up higher. Notice as well, down candle. Look at how price opens, trades into the down candle. ICT bullish order block theory respects this down candle and then runs away. What did I say in the oops? What did I say in the thing? In bullish months, trades away from down days. Look at that. It's trading away from the down day. Even this here too. Just thinking about it rationally. Think about How many days it sold off at? One, two, three, four, five. You got 5 down days. Most people would think, oh my gosh, the sky is falling, right? It's the end of the world. But then all of a sudden, in one day, one candle regains all the gains lost here. This completely throws a lot of retail traders off. I'm telling you. I know it does. Because if I was a novice trader and I was just getting in and I was new to trading, I'd be like, what the hell just happened? I thought it was bearish, bro. But then all of a sudden, Tuesday in one day went up like this. I was like, this is madness. This is madness. I'm like, what is going on? But people don't understand these things because they don't have the experience. But just seeing this in itself is just like, oh wow, institutional sponsorship. Somebody stepped into the marketplace and broke all these previous daily highs. It broke one, two, three. Broke three previous daily highs in one candle. If that's not significant, I don't know what is. Three daily highs. Excuse me. Three daily highs. Damn, I'm talking a lot. Three daily highs in one candle on a Tuesday, too. Look at the large candle happening on Tuesday. What are the odds? Pretty high. Probability is in your favor. Tuesday is most likely going to print you a large candle. Wednesday as well. And Thursday as well. Sometimes they may be back to back. Sometimes you get large, large, large. Not always a thing that you would see. It's pretty unicorn. If you do see it, then hey, the market probably is in some the world is probably in some terrible times. If you're seeing just large, large candles in one direction, something it's going crazy. Normally it's going to be large, small, large. That's the pattern I like to say. It's a pretty simple one. Large, small, large. Or it's going to be vice versa. Small, large, small. You see it here. Small, large, small. This is the day everybody is tricked. Right here. Tricks them up. And then even the next day it prints down. So it gets them even worse. But then knowing the formula, like I said, swing high broken, wait for the higher swing low, wait for a down day, buy. Boom. I just was able to call. Think about that. I was able to call where the market was most likely going to go, but I had to been patient for it though. I had to wait almost 2 weeks, 3.5 weeks, 2.5 weeks to even get this trade idea and this trade idea. Some people can't stomach that, unfortunately. And I like to play the patient game because it allows me to catch the trend. Let's see what happens the next day. Down day. What can I do here? And it's small. I like that. It's small on a Tuesday. And tomorrow, I could do what? Do the same thing. I don't know why I moved it. But yeah, yeah, perfect. Tomorrow I could do what? I could probably buy. Let's say I take the loss. Next day, it's still another opportunity. It's the same thing. I do the same thing over and over. I buy after the down day. I'm just rolling dice. I'm rolling dice because I know the probabilities are probably in my favor. It's a Thursday. I trade on Thursdays. Let's go. Winning day. And what is it doing in this nature as well? It's still creating what? Look at the flow of the market. Higher swing lows. Look at that. Work with me. There you go. Higher swing lows. Doesn't take a genius to see these things. Just got to clean your chart up. Higher swing highs. Look at all the swing highs that it keeps forming. All the tops, right? That everybody thinks, oh, it's going to reverse here. It's going to reverse. Supposedly. Everybody likes to try and call the top. Look at that. That's great algorithmic price movement there. That's a trending market. These are conditions you want to be in because there's more opportunities to you as a trader to win here. There's more opportunities because you have the edge. You have the edge. You know the market's going to go up. So let's keep trading up. What is it going to target? Swing highs because the market's bullish. Let's target the swing high. We have a swing high up here. So that means we still have room to target this high. Let's see what happens. Bingo. No brainer. It's a no brainer. Then all of a sudden, people are going to say, oh my gosh, you're a fortune teller. You know how to read, you know future price action. I'm not a fortune teller. I'm just someone that has a plan. I don't know if it's going to go up there. I don't know. But when I put myself out there publicly to other people on YouTube or in the Telegram channel, and I show them this, and they're like, wow, how'd you do that? And I show them, and they're like, no way, you couldn't have done that. That doesn't make any sense. I got this moving average though. It's telling me to buy now. It doesn't make, I don't understand. I'm showing you something very natural in price. This is something that you could learn on Baby Pips. I guarantee you go on babypips.com, they'll probably tell you the same formula that I'm showing you here. It's just that it's not cool, I guess. It's not flashy. It's not pizzazz or whatever kids want to say nowadays. It's not lit. It's not cool. This is still cool. My chart is still nice and clean. I understand exactly what's going on here. I can express to other traders what I think the market's most likely going to do. I think it's going to keep trending higher. Down day. Another opportunity to potentially buy on a Thursday. I'm just rolling the dice. I don't know if it's going to be correct, but I want to have the odds in my favor. And look at that. Look at every single down day after the confirmed higher swing low. Not all the other down days because that's carnage. Sheesh. Which is why you wait. After getting that higher swing low, down day. Why you want to do this to me now? There you go. Trading view. Ooh, this platform gets on my nerves sometimes. And I definitely got OCD. Down day, down day, down day, down day. I had to been patient just to catch these setups, like I said. Just to get these setups, I had to been patient. But if you just look at the whole idea as a whole, this was a buying opportunity here, right there. Swing low. Now, in these down candles, the way I like to express it and explain to other people, I could be wrong, but everybody has the way they like to materialize and express how the price action is being delivered, right? IPTA is interbank price delivery algorithm. That's what ICT has coined. That's what he believes. That's his ideology on what the market is truly doing. Do we know if it's right or wrong? No, we don't. We have no idea. I don't truly trust everything the man says, but that's besides the point. We have down days, and those down days, in my mind, you know what I think? The commercials are buying every single day. That's what I think in my mind. I think they're buying here, they're buying here, they're buying here, they're buying here, and buying here. Even though the market still produced a down candle, I believe wholeheartedly that they're buying in every single one of these down days. That's how I see it. And eventually it finally displays itself and it spills over and they finally let it fly. There it goes. Back up. And they repeat the same thing. Down day, oh yeah, they brought heavy here. Next day. Down day, oh yeah, they brought. Another down day, oh yeah, they definitely brought. And then it finally, like I said, it expresses itself. There you go. It's not that you get one down day and you automatically instantly will get an update the next day because we know that there are times where that doesn't happen right here. But with a little bit of patience and following the trend, we avoid certain scenarios like this. We don't even have to trade any of these days. And if we do trade these days, it's most likely going to be what? A lower time frame intraday setup. For example, I would probably be using what? The Asian session model on Tuesday or even Thursday because I prefer those days for the model. So I'm not wholeheartedly out the market. I still have things in my arsenal. I can still use some type of model when my swing trading model is still pending out. I could still use what? The New York model if I'm still waiting for my swing trade to pending out. That's just how I would use it. But once you find the trend, you have edge. You have edge every single time. Now, thinking about the down day concepts, let's change it to something like gold. Actually, no, let's change it to something like use Swissy. Use Swissy is something that people don't talk about a lot. Just look. I don't even have to look. I don't even have to start going into the monthly time frame to show it. I just want you to look at this. Look at this price leg going down, and think about the ideologies I was telling you. Does it not look so? Does it look super obvious now? I know it's hindsight. I know it's hindsight, dog. I know it's hindsight. And everybody's gonna say, "Oh, bro, it's hindsight. We ain't really learning nothing." Yes, you are. You just not focused enough. You're not thinking critically. Look at how the market had two huge legs down. Technically, like two and a half legs down from what I'm showing on the screen right now. From November all the way to December. You got this little leg here. You got another leg here, and you got another leg here. You got three little legs. You got a large leg, medium one, and a little small one here. Look at how obvious those selling scenarios become. It's almost as if we got 2020 vision. We have a way better possibility to find the sell setup. And where is that? The up days. But then, Deontay, that's hindsight. We didn't know that it was going to do that. I don't need to know if it was going to do it. Hindsight is still providing me valuable information because I could go and forward test this, which is what I did in 2023. I was forward testing the model. I was actually putting my money where my mouth was, and it proved results. Obviously, it could be tweaked. Obviously, it can always any model can always be optimized to a certain degree. There's sometimes I think some people over optimize the model and it defeats the purpose and the consistency and the edge of the model just declines. And there's other factors that come in, like the monthly, seasonality, geopoliticals, interest rates, inflation, all those things tie into the market. It's not as simple as it seems. The market's not going up and down because of the buying pressure and the selling pressure. The market's not going up and down because everybody in the forensic forex discussion chat sold gold or brought gold. No, it's not doing that. It's doing that because it just wants liquidity in its simplest form. Like I said, if I had to explain trading to a child, if I had to if I had a kid, if I had a son or a daughter, I would be explaining to them how to trade in the same fashion I'm talking to you guys right now because it's so much more simpler. You go out there and you get confused. You get confused. You learn all these other things from other people, all these gurus and mentors and all these other people in certain groups and stuff. You get confused, you get lost because it's not simple enough and it's not objective. It's not objective. It's subjective because when you go back to thinking about this, everything I show here, oops, is objective. This is not subjective information that I'm showing you. This is facts because we just went through many examples of where this occurs. Price bringing traders on the wrong side for the first week, price creating inefficiencies, price creating swing points inside the inefficiencies and continuing its trend, price respecting down candles in an uptrend, price respecting up candles in a downtrend, meaning it trades back up into the up candle as a bearish order block and then sells away from it. This is truth. And all the other things I told you as well with range cycle, large and small days, day of week, buying and selling on Tuesday, Wednesday, and Thursday. The models can be very simple. It's just people overthink the process of how to make a model. For example, uh, intraday, right? For example, let's slowly start to get into intraday. How long have I been talking for? Shoot, it's 2:25. Shout out to anybody that's still here, man. I'm gonna post the whole thing. Everything's gonna get posted. Intraday, and if you're still here, Thank you, man. Appreciate you. Thanks for wanting to learn, and thanks for supporting me, and thanks for just being here and keeping me company. Um, I want to show an intraday example, right? I think lab work would do it. Lab work, lab work, lab work. This computer is funny. The Chromebook sucks. I should have never brought another Chromebook. I should have never brought a Chromebook in general because it's like it does this funny thing with my this indicator that I use. Oh, now it doesn't want to do it. Oh, you're not embarrassing me tonight. Hey, it probably fixed itself. It was like showing like a blob of like all these colors on my chart with this indicator, but it looks like it fixed itself. Um, Shoot, if that's the case, then I'll just have to. There you go. I knew I spoke too soon. I spoke too soon. Spoke too soon. I don't know why it does that. I think it's this. I had to go back to the other indicator I use. I really like that one, but some reason this computer. Yeah, there it is. Clear this all up. This computer was acting super funny. Oh, look, just real quick. Oh my gosh, real quick, just real quick. It's so crazy when you see this stuff. You're like, dang, man, how come I haven't seen this before? Because no one's talking about it. Look at this price leg up, right? And you can make a lot of money off of gold trading in FX. You can make a lot gold versus US dollar. You make a lot of money per pip trading gold. Very risky though. But notice, when did the best buy conditions come? After down days. It's almost like I could flip a coin and tell you that tomorrow is going to be bullish or not. Down day, up. Down day, okay, loser. Down day, winner. Down day, winner, 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 winner. Down day, winner. But you need to know the trend first. I think once you figure out the trend, then you apply that concept. It's night and day. You could start reading daily draw price action much easier than all the other people, I think, at least in the trading community. I think it's just a really realistic approach to finding daily draw. I seen and watch other people's videos about how to find daily draw and daily bias. They make no sense. I'm gonna be honest with you. They make no sense. What I show, I think, in my opinion, and I would love your feedback too at the end in the Q&A, your feedback on what you think about it. Um 15-minute time frame, perfect. Okay. This is something that I've always seen. It's so simple and so truthful. And even recently, because I've been talking about it too, because everybody knows if you were in charter, you were exposed to the market maker models. But even before that, ICT had all this free content. He was kind of showing these things already. He just repackaged it and sold it to people. You know what I mean? Like everybody's just trying to sell a course, make money. You can't blame them. You know what I mean? You can't blame them. What I can't blame people for is lying. Don't just tell the truth. Just tell the truth where your money's coming from. Um, Selling opportunities, right, on any day. So let's say Tuesday, Wednesday, Thursday. Let's say you wanted to sell. You sell on those days, but where do you sell? You sell above the Asian session high. It's normally the best selling opportunity for the entire day. You sell above the Asian session high, or vice versa. If you're buying on any of those days, Tuesday, Wednesday, Thursday, you buy below the Asian session low. Guarantee you, you see more profitability and more success and a better curve to your equity curve over time. Guarantee you. Just take a look at some of these days that trend down. Just take a look at some of the days that trend down. This day was a down day. Yes, the Asian session was pretty extended, but just look at it. It's just merely understand the concepts and the flows and the methodology. People always want things to be super perfect. Oh my gosh, it didn't do this, it didn't do this. It's okay. It's not gonna be perfect. You can't control the market and tell it go down, go up. I don't understand why people get so frustrated sometimes. You see them in these Reddit forums, in these trading view forums, they get really upset. Okay, this one didn't break the Asian session high, not a good example. But preferably you would see price come up like a class at AMD, accumulation, manipulation, distribution. The manipulation is occurring around the Asian session. That's what's happening. So that's a model in itself. You're just searching for AMDs. Why make it even harder for yourself? You want a good example. This one here. That's a good example. because it doesn't happen as often as people think. That's the problem. That's the biggest problem. People want it to happen every day. 5 days out of the week, they want it to happen. That's a unicorn thing. You'd be lucky if it happens 3 times out of the week. It's a unicorn thing. Asian session high right here. Look at how it raids it. We got the replay function here with us? No, we don't. Trading View sucks, man. I don't know why I pay so much money every month to these guys. Asian session high is rated here going into London, and sometimes it happens before London. What could you do here as a model? Sell 5 pips above the Asian session high. Sell 15. This is what I was saying. Sell 5 pips. Sell 15 pips. Sell 20 pips. Risk 1% or half a percent at 5 pips or whatever it is. Or sell exactly at the break of the Asian session high and have a 20 pip SL and hold till London close and see what happens. Just see what happens. And I guarantee you, most times you will see some days where you make a lot of profit. Like I said, risk at your own disclaimer. Forex is a risk. I don't want nobody suing me. Same thing here. Look, price comes up, takes out the Asian session high, and then does what? Targets what? The Asian session low. So if you had to plan your trading day, intraday, this is for all the people that day trade, to keep it simple. If you had to plan your day around intraday trading, I would plan it around the Asian session. Mark out the high, mark out the low, and think critically about it. If you think it's going to continue to sell and you miss, let's say you miss, because everybody can be late. Not everybody's disciplined and consistent. Let's say you miss this best sell opportunity above midnight opening price, above London opening price. Notice all the confluences here. It's selling above in a premium. This is 2 a.m. European open. Or even if some people, oh, what about 1 a.m.? Okay, use 1 a.m. too. Doesn't matter. It's still close to the same price point. 1 a.m. or 2 a.m. The price point is literally not that different. Look at this is 1 a.m. opening price right here, and this is 2 a.m. opening price right there. Not a big difference. Use either one of those. Price trades above those price points into a premium. Look at how they sell in the premium range after taking out the buy side. You have a lunch period here. This is something I observed as well. And a lot of scammers out there. Oh man, remember people were telling me, "Oh, there's a model in here." There's no model in here. It's a dead zone. There's no model in this period here. It's a break in the session in the kill zones. Yes, the sessions do extend. They all overlap. But according to ICT material, this is all dead. This is all dead. There shouldn't be trading in here. The trade happens in the highlighted area and you hold into the dead zone. That's the whole point. You find the trade setup and it should trend in a direction for you to get profit. You don't find the trade setup inside the dead zone. If you miss the best sell opportunity here and you know that price is most likely going to continue selling lower, or let's say to the previous daily low, you think it's going to continue going lower, what can you do as well? You can sell here with a sell stop. You sell on weakness instead then. If you can't get that best buy, that best sell at the low point. And that's where I say this is where I think retail logic can come in and be beneficial. Break retest, but you need to have the information behind it and what you want it to do. Break retest. Why are you thinking about the break retest on the Asian session low? Because we already took out the Asian session high. And I think it's going to continue going lower. There you go. That's reasonable. That's objective. Let's go to another day. Nope, not a good example. Forget gold. Let's jump into a currency. Let's do New Zealand dollar. Something a little different. Look at this. This is most recent in time too. This is AMD. It may not be as clean as people may want it to be, but it's a accumulation, manipulation, distribution. Let's bring it back to the Asian session. You got your accumulation phase. Characteristics of the Asian session. This is all basic stuff. Most people should know the characteristics to all the kill zones. Asian session tends to consolidate, especially for the dollar cross pairs. We got the Asian session high and we got the Asian session low. If you are going to be bearish going into Friday, what should you be looking to do going into Friday? Ideal sell should be above this high. Let's see what happens. Price comes up, that's a selling opportunity, right? But let's say you're more specific and you don't want to sell inside the dead zone. That's midnight opening price as well. So you can see we're trading above it as well. Straightforward. Okay. We're still waiting. Waiting. 2 a.m. hits. Nice. 2 a.m. hits and you're still above the Asian session high and you get above 2 a.m. opening price itself. Okay, let's sell. Let's sell right there on the spot with a 15 pip SL or a 20 pip SL. And with a 1-to-1 back down to the downside, a 15 pip TP or a 20 pip TP. Very simple metrics. It didn't take me too long to conjure that up because of the experience I've had. And there you go. What is it going to most likely target? Bingo. Asian session low. Accumulate. Get the manipulation on the retail traders. It's the same thing I show with the IPTA data ranges. It's the same thing I'm showing with the monthly chart, pulling traders to the downside on the bullish month and then running up, or pulling traders to the upside on a bearish month and then running down. It's the same fractal idea that I'm showing you here on the lower time frame, on the 15-minute time frame. Get the traders to go long. Yeah, and then we go short on you. It's really deceiving, right? Really deceiving. I don't like trading London personally because I live in New York, and at this point in time, like right now, it's 2:37. So technically, if the market was open, we would be in London. I would be sleeping. Today, I'm not, but I would be sleeping. And plus, London, I think out of all three sessions, this is out of my experience at least. Many people may have different experiences, but I'm just expressing to you through my eyes. London is the hardest session to trade out of the three kill zones. The second hardest one to trade, and this one is debatable, I think. The second hardest one to trade is New York, and then the least hardest one to trade is Asian. Some people may say it's debatable because Asian session doesn't do much and it doesn't move anywhere. And then other people may say, oh, New York session may be difficult because of their time zone as well, where they live and their work schedule. I say it's difficult because it is difficult because this is the heat of the storm. This is where the most of the volume of the trading day comes in. Asian session is technically a part of Friday. Like I said, even though trading view it's so confusing when you start to break this down and actually study because this is 5 p.m. The new daily candle already started here. It already started. But then we have IPTA true day open at 12 a.m. New York Eastern Standard Time. That's 5 p.m. New York Eastern Standard Time. The Friday candle has opened, but it's still technically Friday, Thursday. So it can be confusing. And then the question is, oh, then which one do we use? Do we use the 5 p.m. opening price or do we use the midnight opening price? I've mentioned this in one of the comments. I said that if you're a swing trader, use the 5 p.m. opening price because that's what you'll be using to use your buy stop and sell stop orders. You'll be using that at the open or close of the candles because you're getting into that new daily candle and that daily candle should knock you in with strength or weakness to catch that next run during the dead zone. So you see how price does trend in this dead zone right here, even though the dead zone is technically 12 p.m. in my opinion, because you have an extra session. You have the London close, which produces reversals against the New York session or the London session or the direction of the intraday trade. You have the London close session, which is additional bonus. I don't trade it because I personally feel like I'm not most successful trading it. I stick to my strengths. People like to always poke at their weaknesses and don't realize, yo, you clearly suck at doing this. You should stop doing it. You should try something new and admit to yourself that, oh, this session is my worst session. Let me try to trade another session. And then all of a sudden you're like, oh, I actually like this session. I find it to be a lot more comforting than other sessions. London is a no-no for me. But you have this dead period here. But 5 p.m. moving on is where most likely you're going to get triggered in on that limit and stop order technique I was talking about, swing trading. That's when I would be using this. Not for intraday trade. I'm not going to sit here and mark it out and say, oh, this is the opening price, premium versus discount. No, you clearly see it doesn't work here because it's a dead zone. The algorithm is not ready or engaged to be hunting for buy side and sell side liquidity. It's stalling. It's literally stalling. Literally stalling. You don't trade any of the areas that you see that are highlighted white or is not highlighted by the indicator that I have here. It's a dead zone. Do not trade in. Well, I should have London close put on there as well, but do not trade in these areas because look at what you're noticing. And like I said, this is objective. This is not subjective. Nobody can tell me this is not fact. It's objective because looking at these 3 days, this is December 25th, the 27th, um, what else? And the 28th. Look at in between those white days, in between the white zones. Look at how the market is consolidating. It's a no-brainer. You shouldn't be trading in those time periods. It's going to consolidate. You're going to go through psychological warfare with your own self. Like I said, we're emotional. We're emotional. I don't care what anybody tells you. "Oh, I'm a man. I'm macho. I'm this. I'm this guy. I'm top G. I'm this." Bro, you come to trading, you're gonna get humbled every time. Your mind, there's far but none. A lot of people get humbled. Oh, I'm the toughest guy in my town. I do this for my family. I'm this, six, and the third. Well, come trade with me for a day and see how your mind will completely melt. People don't have that mental fortitude. They start to get depressed. They start to get sad. They start to go through withdrawals. They start to revenge trade. And all it starts with one cue. And I'm a psych major. It takes one cue. I went to school for psychology. I have a BA in psychology, University of Albany in New York, if anybody wants to know. I didn't go for my master's because why? I wanted to trade and I wanted to do other things with my life, farming and growing cannabis. Other than that, you can see there are small cues that get people into trading poorly. It all starts with one thing. It's a cue. How do you get distracted? Oh, I pick up my you get a ding on your phone. Ding. Someone messages you or some shorty calls you or something like that. Or or somebody hits you up for something. You get distracted and then you pick up your phone. And now you're on your phone. And now what happens next? Let me go through some games on my phone. Oh, let me go on Instagram. Oh, let me go on Telegram. And now all of a sudden you've wasted what? 30 minutes, an hour, 2 hours, 3 hours doing nothing with your life, with your day. That's how easy it is with it when it comes to cues and falling into a spiral into bad habits. It's the same thing psychologically when it comes to trading. You lose a trade, 0.5%. You told yourself you wasn't going to trade again today. But then again, you convince yourself in your mind that no, I can make it back, and no, I have the skill set, and no, I see the setup, and you go in again. But instead of risking less, you risk more, and now you're down bad. And that's how easy it is to lose in trading, which is why I said I had to bring out the statistics because everybody's like, "Oh, that's a myth." There's not a lot of traders failing. It's not a myth. I don't know why I read that statement today. It's not a myth. It's very much true. Read that again. Read that again. You can I can even send you guys the link. I'll put it in in the bottom of the video when I post this. You go on forex.com, scroll to the bottom, find terms and policies and disclosures, click that, and it's going to show you all the statistics for 2023 and the year before and whatever they have in most recent time. Read it again. Look at all those and this is one broker. This is one broker. This is one broker. There are thousands of brokers around the world. This is one broker reporting in saying that 60 to almost 70% of the accounts that they have live are failing. Active non-discretionary trading accounts. And what do they say at the bottom? Look, 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 look. What does it say? What they always tell you? Before deciding to participate in the forex market, you should carefully consider your investment objectives, levels of experience, and risk appetite. Most importantly, do not invest money you cannot afford to lose. People out here gambling their savings. People gambling their savings, dog. You telling me that's not something that you should be doing? Come on, bro. I be trying to tell people this shit is not a joke. Excuse my language. It's not a joke. You should not be risking any more than you should able to afford. Stop breaking the model. 1% is good for the day. 5%? Oh my gosh. I don't care what it seems lavish. I know it seems lavish. You go, you hear all these guys talking on YouTube and all these interviews. Oh my gosh, 24-year-old trader. Yo, 32-year-old trader. Oh, I risk 5% every day. I brought like 30,000 FTMO accounts, and I blew like all of them. And then finally I hit one and I made 100K. Bro, these people are going to lose money every time. They get money, lose it. Get money, lose it. You want to get money and you want to hold on to money. I don't hear nobody talking like this about this in the trading community. Nobody. All these guys that go on the podcast, all these guys that they so famous in the industry supposedly, they got all this attention on them and they're making all this flashy content. These people lose money so quick. That's why they have to do the lifestyle stuff. That's why they have to make the clickbait titles. They have to make the clickbait thumbnails and stuff. Oh my god, it's 100% profit. Every dummy in the world is gonna click on the video. Of course, they're gonna click on it. It's super colorful. It's got big logos on it. It's got money. It's got Lamborghinis. It's got half naked girls in the thumbnail. It's got jewelry. Come on, people don't be thinking, bro. We have a world of people that just follow and chase the hype. That stuff is not important. We all live and die. That's not important, bro. You got a daughter, you got a son, you raise them. You teach them these skills. You put them through school. You feed them. You got a wife, you got a husband, you love them, respect them. You do what's right. You don't sell your soul for money. You don't sell your soul for money. It don't work for me. It don't fly in my book. But now I'm getting off topic and getting out for trading. Notice all the buy conditions here as well. Another example. Look at this. It's a Wednesday. Like I said, nobody knows. Oh, how do you make a model? It's so easy. I just told you. If you're a buyer, buy on Tuesday, Wednesday, and Thursday. Where should I buy? Buy below the Asian session low. That's it, Deontay? Yes. Why does it have to be 20 steps? Why does the model have to be so complex? Buy below the Asian session low by 5 pips. Okay, cool. Buy below the Asian session low by 20 pips. Let's see how low this goes. Look, oh my gosh, bro. Like I should oh my gosh, bro. It's literally 5.5 pips. 5.5 pips. Now how did I know increments of 5? Experience. Study the market. Increments of 5. The market likes to rate highs and lows by increments of 5s. Increments of 5. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Start to study that stuff. You're going to see these little things. People don't see this stuff because of what? Indicators, supply zone, demand zone. They don't see these things. 5 pips, literally on the mark. Low of the day comes in right after 3:30. The heart of London turns around. You caught the low of the day. The low of the day. That's filthy. What? That's filthy. And you use how much brain power to do that? Zero. Use zero brain power to do it. Zero. While other people are sitting here looking for, oh my gosh, I gotta find this fair value gap and this PD array. And then they take the entry and it doesn't work. They're like, what? The order block didn't work. What? The fair value gap didn't work. Yes. Those are high probability losing entries. A lot of people have high probability losing entries. They're picking the wrong fair value gap. They're picking the wrong order block theory. They're picking the wrong mitigation block, breaker, volume imbalance. They're picking all the wrong ones, and they can't figure out, oh, why this ICT material is not working. It's more difficult than you think. And like I said, I think it's on the teacher. The teacher needs to be more specific in what he's in teaching other people. You can't just tell people, "Oh, these are order blocks. These are fair value gaps. These are this." You got to tell them exactly which ones you're talking about. Like I said, some shady stuff in the community. Some funny stuff happens in the community. People always sit here and lie. People want to show results after it happens. But hey, what do I know? I'm just a 25-year-old man that lives in New York who trades and is finally a little profitable and is steadily climbing and trying to increase his trading skills so that he can provide for his family and loved ones and for his future with his girlfriend and etc. What do I know? I ain't nobody special. I am not nobody special. I'm like any other person in the Telegram channel, just like you guys. Worked a 9 to 5 as well. Went to college as well. Um, done had arguments about with my parents about trading. Have lost money. I've been there. I've been there. Or even, I mean, I know there's people that are a little older than me. Like I said, the demographic of trading is men, right? There's probably men that have gotten into arguments with their girlfriends or their spouse or their wife about why are you using our savings or why are you using this? I can only imagine those scenarios. Because if I've been through it with my parents and my own savings and them helping me out at one point in time when I was a broke college student, I know sure as hell other people are going through the same thing as well. So we ain't that different, my friend. We ain't that different. We are just the same. Now I know I'm venting, but this is some real life scenario stuff. We live and die. Most people do not live to 100 years old to become a centenarian. If that's something that you guys didn't know. If you live to 100 years old, you are now considered or qualified to be a centenarian. That is a goal of mine. I want to live to 100 years old. 100 years old. You can't live to 100 years old if you're stressing about trading. Tell you that. You ain't living to 100 years old if you're out here stressing about charts because stress kills. That's first and foremost. And then outside of that, eating right, having the right mindset, being around the right people, being in the right environment, all these other things. But you can't get there until you start to be consistent outside of trading and then inside of trading. You ain't gonna magically wake up and be like, yo, I'm consistent. It takes days, it takes weeks, it takes months, it takes years. Eventually, you will get a better equity curve. You will be able to produce way better numbers than other traders if you just stick to the long term. These other traders that are flashy right now are not going to be hot in the next 3 years. I promise you. They're going to be nobodies. They're going to be nobodies. They're super hot on YouTube. They're super this and the third. Da, 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 da. They try to sell a course. They get exposed. This and the third. Ain't nobody. And then what do? They go ghost for a couple months. They go ghost for a couple years. Then they come back to YouTube again. And what are they doing? They're predators. I want you guys to understand. So I don't trust people. They are predators. They're going to sell you a course. They're going to scam you. Stop falling for that nonsense. That is all shite. It's all shite. Buy below the Asian session low. If you're a buyer, you're done. Look at the profit potential, right? Like I said, let's set it up. You go long, like I said, 5 pips below here. Like I said, it's very minimalistic. Let's say you think that the market could potentially run down. Let me measure this out. Say 15. That's fair enough. It's always fair. 15. 15 pips is something that you're able to risk. That's 1%, right? You did the math, you did the calculations, you did the lot size, you used the calculator, boom, you got in. 1% risk, a full 1% risk is this 15 pip SL. When it hits this, you lost 1%. Simple. 15 pips up. Excuse me. Sorry. Where's that 1 to 1? Is that 1 to 1? There we go. Close enough. That 1 to 1. There you go. That's all you had to do. Wait to buy, 5 pips below, run it up. Now, people may argue, but what if it doesn't go down 5 pips for the entry? Excuse me. Wow. Where's my manners? Excuse me. What if it doesn't go down 5 pips below the Asian session low? then you miss the setup. You don't get the entry. That's okay. You get to live to trade another day. No equity loss. There's no trade, no trade taken is no equity loss. I'd rather that. That's okay. Because remember, as soon as you get into the market, what happens? Risk, 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 risk. You can lose money. You will lose that one. You can lose that 1%. Think about that. You could lose 1%. Now, if you could lose 1%, who's to say you can't lose five? Who's to say you can't lose seven? And now seven is down bad. Seven is crazy. 7% down in drawdown is ridiculous. You must have an account that is in the hundreds of thousands where you're able to say, oh, 7%, ah, no problem. I'll make it back. But even then, so that's still poor risk management. That is a very simple method I just showed you. And notice how the market does what? Trends more than that 1-to-1. Turns into it turns into like, what was it? It was around here. It even extends even higher. You see that? It even extends even higher. The whole point is how simple it is to put a trading model together. It doesn't have to be complex. State what the risk you want to take, the day of week you want to trade. Even if it's the days that it's not ideal, which you shouldn't. But like, let's say life just you just don't got time. You just don't got time to trade on Tuesday, Wednesday, Thursday. You know what I mean? You got business, you got other things going on for you. You got school, you got study, you got exams, you got sports, you got whatever, you got film, you got something else going on. You can't trade on Tuesday, Wednesday, Thursday. Cool. You could only trade Monday, Friday, and even Sunday potentially. You could make a model on those days. You just have to study and see exactly what happens on those days. It's gonna be a little more difficult. I ain't gonna sit here and sugarcoat it with you. It's probably gonna be a lot more difficult to trade on Mondays and Fridays. There are Friday models for sure. I know that. And there are opening gap models for sure. Not as feasible, but still doable if you don't have time. And you make that your one thing and you keep pushing it. You keep doing that. You keep doing it. You keep doing it. Consistency, 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 consistency. Equity curve keeps going up. There's gonna be peaks and valleys. It's gonna go up, you're gonna lose 1%. You're gonna lose 2%. And then you're gonna gain 2% back. And then you're gonna gain 4% and higher. Peaks and valleys. You want your equity curve to look very natural. You don't want your equity curve looking like this. That's a bad description. That was terrible. You don't want your equity curve. You don't want your equity curve. This is the start of the account balance. Boom. You're in. What the heck? This is the start of the account. You don't want it to go like this and then all the way down here again and then all the way back up here again and then all the way back. That's terrible. You're doing something that's definitely not getting you slow and steady results. You're risking too much. You can easily see how somebody trades when you look at their equity curve. You look at their FX book profile and what they're tracking, and you see their equity curve bouncing around up and down like zigzags. These people are just gambling. But when you see somebody with an equity curve that goes up like this, may come down, right? Goes up again, comes down, goes up, goes up, comes down, goes back up. These are people that are consistent. These people got a model. This is a positive equity. You don't want that equity curve that look like this. So jagged. It's so subtle. It just turns around like a swing high and swing low and reverses. No, you want it to go up. You want to keep theoretically you want to keep making higher swing highs, higher swing lows, higher swing highs. And yeah, you're gonna get those false breaks sometimes. And then you're gonna get back on your feet and you're gonna recover those losses. But that's what you want. These other people, I'm telling you, they're not gonna be around. I'm telling you, bro. These people that they glorifying on YouTube, on Instagram, and they flexing hard, bro. These people are not going to be here in the next 10 years, bro. Promise you. Promise you. The people that are really trading, you don't even know about them. You don't even know about them. I've been trying to tell people all the time. When people start to trade and they start getting consistent and they said all they could say to their friends and their family members about how to trade, I figured out this model. Yo, I've been doing this for 2 years in my basement, in my dorm room, in my room, etc. I've been doing it after I got home from school, after I got home from work. I've been studying this little thing, and these people go ghost. And you don't ever hear a peep from them ever again. You know why? Because they figured it out. They figured it out. They figured it out. They ain't on. They're not in the Telegram channels. I promise you. They're not in the Telegram channels. They're not on Instagram no more. They're not on Twitter no more. They're not posting. They're not posting their demo trades. They're not posting their prop firm results. They're not posting their payouts because they don't care about what you think. You should never care about what I think, and you shouldn't care about what the next trader, the next man thinks. You should never care about what these people are telling you. Never. And that's coming from me. You shouldn't care about what I say. Like I said, somebody would have to be an educator at one point in time. People educate other people. I like to teach people. I just love to teach, especially something I love. Especially if I understand it, I'm gonna teach it, and I'm gonna always tell the truth and show exactly how I do it. People are gonna sit there and tell you, "Oh, I trade this way," and then behind closed doors, they're doing something completely different. You're like, "What? He didn't tell me about this though. He was hiding that this whole time. Oh, that's why he not consistent. He don't even listen to his own trading plan. Oh, he don't even do that. She don't even listen to her own trading plan." Excuse me. And people fail miserably, and it's sad. But I do believe in every single one of you guys. I do. I believe in every single one of you guys into becoming profitable and becoming consistent and finding a model that works for you. Let's break it down again. If you're gonna make a trading model, it needs to be simple. It needs to be simple. You got to be able to repeat this thing every single day. You got to be able to look for it every single day without using a lot of brain power. Simple. Look at this example right here. Bingo. That's one example. Look at this chart and show me if you see another example just like it. You do right here. Bingo. Same model. Boom. Look at another day. Same model. Boom. Like I said, this it's a rare occurrence for it to happen. Like I said earlier in the video, I said you're lucky if you get it 3 times in 1 week. If you're able to find a model that or you're able if your model is able to hit 3 times out of the week, oh, you're lucky. You're lucky. You got an edge. Milk that. Take advantage of that. Time is now. Time is not tomorrow. Time is not yesterday. Time is now. Look at that. Same example I showed you here happened here and here. All this is accumulation, manipulation, distribution. But everybody wants these crazy models. Yo, I'm gonna go on the 4 hour time frame, dog, and then I'm gonna jump back down on the 4 minute, and then I'm gonna go back on the seconds, and then I'm gonna buy. What are you doing? What are you doing? That's so confusing. And I try to tell people if you cannot explain your model to a child without them looking at you like, huh? What are you talking about? I don't understand it, Deontay. I think you need to find a simpler trading model. Make it simple. Simple is more. Simple is wealth. Long term wealth. Long term wealth is simple and boring. It's boring. These rich folks are doing boring things. People that are really successful, it's boring. Day in, day out. Another 2 milli. Another 10 milli. Another this. I just do the same thing every day, but it just makes me a lot of money. It's boring. It's not the most satisfactional, or it might not be the best reward. What's the word? The most pleasurable thing in the world to do. It might be the greatest job. It might not be the greatest job in the world. What I do. It's boring, but it pays. Look at all those tech guys. For instance, all those people that got into tech the last 3-4 years, they've been getting money out the wazoo. All the guys that went to school for technology, engineering, they getting paid. They've been getting paid. And we'll hope and pray AI doesn't take over. But they've been getting paid. But what they do is boring. At least to some of them. You really ask some of those people and sit down and talk to some of those guys and gals, they say it's boring. What I do, I sit in front of a computer all day. I code this. I make sure that the software does this. I make sure that they don't hack the mainframe. This is the third. It's all quote. I'm gonna put this in quotation marks. It's nerdy for most people, and most people get lost in what they're saying. But these people learned it, studied it, and it's like the back of their hand. They know it, and it's so boring. You need to make this boring. This should. It's not supposed to be exciting. You're not supposed to be like, oh my gosh, I made 10 million. I made $10 million today. You're supposed to be like, oh, we made $10 million. Cool, nice. Next day, new trading day, because you could lose that 10 million tomorrow. Let's focus up. Ain't nobody. I'm trying to tell you, nobody be taking this stuff serious, bro. Only the people that are not flashy, not talking nonsense, really care about the trading community. People don't care about other people in the trading community. That's why I'm really particular about what's being said in the chat. I'm always on my phone. I always check the chat. There was only one mishaps when, like, I guess some bot came in and they was sending, like, explicit stuff in the chat and stuff, and I was like, oh crap, how'd I miss this? I was busy doing something. I was finally able to remove them. They were spamming something in the chat. But I'm always on my phone. Anytime I hit ding, 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 it's the discussion chat. What are people saying? Are people misleading other traders? Are people just showing off? Are people just showing profits just to entertain and make themselves feel good? You got to check people like that sometimes. You got to just sometimes you don't even comment or react to certain things like that. They send something like that in the chat, they send it. Oh well, they send it, and people are gonna people just people that have been in the chat for like 2 months cursing me out. Oh, you don't know what you're talking about. Da, 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 da. F you, and your logo page sucks, and your Instagram sucks, and your Twitter sucks, and you got no followers. Okay, leave, bro. See you later, bro. Where are you now? You probably still exactly where you left, cursing me out. Still unprofitable. Still not understanding the concepts. Still buying courses. Still getting scammed. Still following people in certain cults that don't really trust and care about your well being. These people will suck people's savings dry. They don't care. They want money. They don't care about the next man. They don't care about the next woman. They want money. They want money. These people want money. And it's not for the benefit for you. It's a benefit for them. It's never for you. It's for them. Same thing. Oh, that's a Friday. Let's say we go Wednesday. See, it doesn't occur every day. Doesn't occur every single day. Like I said, you'd be lucky if it happens 3 times out of the week. Obviously, it's hindsight. It's hindsight data. But let's say theoretically, you happen to come into Wednesday with the perspective of being a buyer. Something on the daily time frame, something on the weekly, something on the 4 hour, something on the daily. Something told you to be a buyer. Like I said, yes, I am cherry picking the examples, but you need to cherry pick and back test and then forward test. Forward test what I'm showing you here. Asian session low is rated here. Like I said, the model could be as simple as buy 5 pips below. Comes down 9.2. So you would have been in a little bit of drawdown. And what happens? It runs all the way back up. And what does it target? It runs right back up to what? The Asian session high. And notice when it gets close to the Asian session high, it's on go mode. Large range cycle. And I'm not sure if news happened on that day. Let's double check. Yep, I figured. It only had guessed. News happened. See what happened. Oh, wow. Interest rate decision. Who would have known? Who would have known that this news, red folder, interest rate, I was saying this all year, telling people all year, the only news events that you need to worry about, FOMC, interest rate decisions, non-farm payroll, and that's it. Yes, there might be one or two medium news impacts that does come out, but generally those three that I just mentioned. Oh, in inflation rate. Yeah, inflation. I think inflation rate, FMOC, interest rate, inflation, and PMI sometimes, which is sometimes high to medium, and FOMC and NFP. That's it. Other news events, I don't care about because there's no injection coming into the market like these other events. And look what happens when interest rates are dropped because it's the primary driver of foreign exchange currencies. It's night and day. The interest rate can control the bond yields control the bond rate, which in deal controls the yields, which then controls the investors. And then the whole thing comes to a full loop. Then you start to understand, wow, this is why I need to pay attention to what the central banks are saying. It's not just selling and buying pressure. It's not just the bat pattern or the unicorn pattern that IML has been teaching people for years and scamming people for years. It's not that. It's objective. Those patterns are subjective. Same thing here. Look at how London is targeting getting above the Asian session high, and then they sell it back down. Sell all the way back down. And this is all it's intraday. Intraday idea. It's a very simple one that I used to trade earlier in my career, and I found results with it. And I should go back to my roots because the simpler things just tend to be better than all the flashy other stuff that everybody's talking about on YouTube. I don't care what anybody be telling me, man. I know what I'm talking about. I've been doing it for a couple years. I ain't make millions yet, but I will. I know I will. It just ain't my time yet. It's just not my time yet. Once again, look at this. It's a Thursday, day a week. It's a Thursday. There runs below. You may not have gotten this entry because why? It's not 5 pips below. It's 3.8. So you may want to adjust potentially. Or if you don't want to, like I said, you could just do the raid. Price breaks the low, you go long, and you have a 20 pip SO. You go long with a 20 pip SO and you hold. Vice versa. If you were considering going into this market bearish, you wait for the Asian session high to be broken, right on the high, you go short, 20 pip SO. You can't get any more simpler than that. But when you start to optimize it and you start to realize the daily trend, then you could go in and say, I'm definitely a buyer. I'm definitely a seller. It feels good. It feels good. You don't get anxious. You don't get sweaty, clammy hands. You don't start tapping your foot. You don't start getting upset. You don't want to punch a hole in the wall. You don't want to throw your phone. You want to kick something. You don't want to be aggressive and very agitated when other people talk to you because your trading is just going the wrong way. Don't blame other people for your mistake. Don't get upset and start talking to people out their name because you wanted to mess up. It's on you, dog. It ain't on them. It's on you. That's why I like trading because your results are directly related to you as the trader. You can't blame anybody else. You can't sue nobody else unless it's like slippage or they halted trading or something like that. But you can't sue nobody else for your loss because 10 times out of 10 it's a legitimate loss you made. You blew the account. You ain't getting your funds back. Trading is a direct reflection of the operator. You're the operator. You're the indicator. You need to be indicating whether or not price is going up or down, and when to go in and when to go out, and when not to trade. That's a big thing I hear a lot of traders not talk about. When not to trade. When not to trade. What time not to trade. What days not to trade. What pairs not to trade. What news events not to trade. What day, what month, what week of the month not to trade. And we talked about it, the first week of the month. Do not trade the first week of the month. It's a no-brainer. They've taken thousands of dollars from people that first week. Thousands of accounts. Wipe, 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 wipe. NFP comes around, wipe. Give me your money. Wipe. Give me your money. People not hearing me though, bro. I'm trying to tell them. People not hearing me. They're not hearing me. All right. Sheesh, man. What time is it? It's 3:15. Yo, if people are still people are still here. Nah, that's crazy. Yo, respect to everybody in this chat. Yo, fellas, if you have any questions, any comments, let me know now. But we'll go over anything you want. We can look at anything you want. I will. I think I'm gonna stop the recording here because I think I'm gonna open up the mic to everybody. Honestly, like I would allow everybody to unmute themselves. I'm about to let me stop recording. You'll receive an email notification when the cloud is fully ready.